Good afternoon, everybody. How's everybody's Sunday going? Hopefully everybody has a cup of coffee, relaxing. We got two other people coming today. They'll probably be here in a moment or two. Please take this opportunity to pause the video and read the disclaimer. I am not a financial advisor. Neither are other people that will appear on this show. Our opinions are our own. Please do not take anything we say seriously. We just do a lot of research. And please do your own due diligence. This is for educational and entertainment purposes only. So please take this disclaimer to heart. Well, now that that's out of the way, I'm going to try to do better with timestamps in the videos. We're going to have a few different topics today. First one, let's check in with the AI bears. Let's see how the AI bears are doing. I actually have not looked. It's going to be pretty funny in my opinion. Let's bring this up. Not sure if anybody read the comments yet. I have not. I was busy all day so far. And we're going to get to it. Let's make this a little bigger for everybody. All right. Dougie is hilarious. I mean, he's absolutely hilarious. Let's see. I mean, the bearish bull, part 3, does that mean the prices were higher when you wrote part 1 and 2? I mean, go read post 1 and 2 on this. I don't know what to tell you. All right, I can't take this seriously. Us bears aren't done yet. We are countering the gaggle of YouTube rampers who bang the drum on high beta stocks day and night. This is the problem with the bears. I mentioned 8 companies. The companies I mentioned are all over $500 billion market caps. 6 of them are all over $1.5 trillion, I believe. Craziness. Great comment here. The tech giants didn't hit trillion-dollar status by pinching pennies. They poured billions into massive capex scaling. I agree. People actually use Grok to summarize financial stuff. I think that's crazy. I'm not really seeing a lot of bear things. Okay. You keep pointing out to revenue growth, but ignore the scale of capex required to sustain it. Microsoft, Google, Meta, Amazon are spending 70 to 120 billion per year, each on data centers, GPUs, power, and networking, just to stay competitive. Returns are still uncertain. Depreciation is accelerating. ROIC is under pressure. AI demand equals AI profitability. How does ChatGPT make money when Google gives Gemini away for free? That's the point. I'm not talking about ChatGPT and OpenAI. I actually think that they could be screwed in the future because I think Google is going to give Gemini away for free and they're going to build in their whole advertising platform. So great businesses can still be overvalued when the future margins must fund massive recurring infrastructure spend. I don't think they read my post, everybody. I don't think they freaking read it at all. The bubble is OpenAI. Once that pops, market will follow. I don't know if OpenAI is a bubble, but I certainly think there's a problem with the valuation. I'd like to see the financials. This is one of the greatest rants of all time. Wall Street equals morons. All of sell side wealth less than any founder. Mag 7. That's interesting. We have. Wow. Does this guy? Does he have sunglasses on because his future?
Esteban. What's going on, Esteban?
Now your camera's off.
I know. I'm just turning on the lights. Let's put the lights on. Sorry, the lines were crazy.
I mean,
what's going on, Esteban?
I think that you have sunglasses on because your future's too bright.
I agree. I have to hang up this stuff. This room is too big to not hang this stuff up.
I mean, I think the fact that you have all these Amazon boxes in your background is a little crazy.
And I need to put them in the closet.
You do need to get them somewhere.
Need to put them in the closet like me, Steven.
Why would you go hang out in a closet?
I don't know. Good question. I don't need to, but.
No. I got to tell you, you're rocking a Palantir sweatshirt. I like it.
I'm trying to be like you, Steven.
I mean, obviously you're not. I don't have a Palantir sweatshirt.
Well, maybe if you stood by your people more.
Maybe I stood by my people more. What do you putting a little hot sauce on? What do you got there?
I got a chicken sandwich, Steven.
Okay. I get down on that.
From a place called Cane's.
Is that the famous Cane's that's opening up everywhere?
I don't know. We've had Cane's in Texas here for a while.
There's one opening by May.
Maybe that's it, Steven. I think it's okay. I mean, it's just chicken fingers. It doesn't travel very well. So if you got to travel for more than like 15 minutes in the car, it's going to get all soggy. But I think they do a pretty decent job.
Okay. I'm with it. I like it. Ooh, we got some fighting words in the chat right now saying that this is a Chick-fil-A killer. Now I must try it. If anybody's going to say this is a Chick-fil-A killer, I got to try it. Matt, do you agree with that?
They're different. They're different. You want something quick, clean. I would say Chick-fil-A is better. You want something that's a little bit more greasy junk food, then I would go with Cane's. I'll say I go to. Did you send the link to Kris Patel, or?
I did.
Does he hate us, or?
I sent this over 314. I'm checking to make sure it's the same one. Yeah, and he read it because he sent me his picture afterwards so I can make this thumbnail.
What's the thumbnail look like? I never saw it.
You didn't see it?
The one with you and me looked phenomenal.
Oh no, dude. I didn't send this to you? Hold on.
The one with you and me is like fucking all time.
No. This is all time. Hold on.
Sorry, everybody. I'm not reading the comments yet. I'm not ignoring anybody. Well, I guess technically I am because I haven't read your comments yet. But I'm not intentionally ignoring anybody. Oh, damn. I look thin as fuck. I need to be... damn, Kris looks like he's going for Sundar Pichai's job.
That's right.
I mean, Steven, we have big plans. We need a boardroom like that.
Listen.
I like how we have the French press and the drip, both.
I got plans, all right? So, all I got to say, everybody, Gemini is so phenomenal. I sent Kris a text and asked him for a picture. And we got into Gemini, put Matt's picture, my picture, Kris's picture in. I typed 3 sentences. This is the first thing that came out. First thing that came out.
I like percent in the background. Uncle Scotty.
If this is the worst that AI is ever going to be, I don't know how the AI bears can actually think that this is not worth spending the CapEx on.
I don't know, but your boy's looking thin. I hope to be that thin in a couple months, but if you keep eating chicken sandwiches, I don't know.
I mean, I definitely look thinner than I am.
Yeah, why'd I bring my own cup?
I think they made you look a little British.
They got the red in the beard, although perfectly
They
pretty
did.
good.
They did.
You got the red in there.
But seriously, what does everybody in the chat think? Do you think that this thumbnail is good? And keep in mind, this was done in legitimately 15, 20 seconds. This was first try. This wasn't even refine this, refine that. This was legit 15 seconds.
Worried about you, Steven.
I mean,
so what are you buying? You said you had an agenda for today. What's the agenda, Steven?
Yeah, so I wanted to get
Kris has a really good agenda, I thought, but got to be here to show the fucking agenda.
Listen, I don't know where Mr. Patel is. I wanted to start with asking you guys something that I got invited into, but you know.
Oh, you wanted to start with that? Yeah, you didn't answer my question.
What was your question?
Read our WhatsApp response, or my WhatsApp response.
Hold on. WhatsApp. All you sent me was, honestly, I'm pretty sure that if you send it to me, I can just add it on, not say anything. So
good man. I might have to.
Let's put it this way. I think we can figure it out.
We'll figure it out.
Yeah. All right, everyone. So I'm gonna.
It'll grow like whatever it is. It won't be like millions of dollars.
Yeah. So I'm gonna address this real quick. I addressed it last night. I'm gonna address it for the last time. Okay.
Address it, Steven.
Because everybody in the chat keeps saying it. This is the last time I'm gonna address this.
Address it, Steven.
I am super proud of Amit.
I am too.
I think that adding Jess is a great idea. And from what he has told me, his vision is he does not have the time to get the channel there from where it is, and he needs help. And with her background, I think that Amit's channel can get much bigger than it is. I think he may be able to land more guests like Vlad and like Carp. I think that there's a real chance he can get more CEOs on, maybe some COOs and CFOs. I think we may see him on other podcasts that are very big. And I think that this is going to be a great value add for the channel and for the community. So I think that everybody needs to stop with how do you like his girlfriend and all that stuff. Because honestly, that's not what this is. And personally, I want his channel to do as well as it possibly can. And I think that with her help, the channel is going to get much bigger. So I'm extremely excited for him. So I'm not addressing it again. And that's all there is to it.
No, I think brilliantly said. Like every time I have a chat with the Mitman, like I don't think you guys understand. Like this guy is 100% about his business, and he's really putting in so much effort for you guys. Like I don't think you guys truly understand. Like even when he's in his downtime, like hanging out by himself, I'm sure he's thinking about how can I do this better. And so I think the problem that we've had chats about it as mods and stuff like that. And I'm a mod in his chat and I help a little bit. The other guys do a lot of the heavy lifting. I got to show up and troll people most of the time. But, you know, because of that, in a mod group, like he needs help. Like he has this legit business going on. You can't be a single person business. You need to leverage other people and their expertises. And what is Amit? Amit is able to be on stream for 6-7 hours a day. And then you think about it, what is he going to try to do to connect afterwards? Like after you're on for 6 or 7 hours a day, not just like at work, right? Because when you're at work or 6 or 7 hours, like how much work you actually getting done. Like, yeah, some people might be able to get all 6, 7 hours of work done. Some people are slacking, some people go get coffee. Amit doesn't go get coffee during the 6 or 7 hours. Like Amit is going straight through, and yes, he'll take a break for lunch and stuff like that, but come on in the afternoon. But like he is fighting for you guys. And so to that respect, having Jess and seeing how articulate she is and how about her business she seems to be and how upfront she seems to be, I'm cautiously optimistic that this is going to be a huge step up in the right direction. And I think he really wants to take this channel to the next level. Like he wants it to be, instead of some side garage project like what me and Steve are doing, like he wants it to be and take on the CNNs of the world. And I think if anybody of our little group has the capability to do it, I mean, Steve's up there, but I don't have the face for it. But I know Amit, he has both the face and the voice for it, and the authenticity and enthusiasm and passion for it. And Tanner's up there as well. But like all in respect, like I think that in order to do that, you need somebody professional to hang your hat on, that doesn't have ulterior motives, that just wants to help you, has experience. And so I think having her is going to be a blessing. And I think you guys will really see the fruits of that labor coming in the next couple months. I really think that there's going to be a massive step up.
Well said. Well said. Yeah, look, I think that everybody who knows him is extremely happy for him. And
well, anybody that really knows him, you said it perfectly. Like he's about his fucking business. Like nothing will come between him and his business.
100%, 24 hours of the day. That's all he thinks about. So, I mean, I know that he's foregoed a lot of things because of the stream. So, I think he's going to do big things, and I think it's going to be great. I think she's a big value add. So, this is the last time I'm addressing this. I'm never addressing this again. So, all right, we have the last person of the group joining right now.
What's up, boys and girls?
The trio.
What were we talking about?
Talking shit about you. Like, where the fuck is this guy? Just kidding.
I know. Sorry, I was showering.
I showed up late too.
Don't worry. Fresh. I wanted to be fresh for you guys.
No, I was just saying that this is the last time I'm addressing Amit's manager, so I don't even want to talk about it anymore.
What do you mean? Like, was someone asking about something?
No, it's just all over the chat the past 2 days. So let's just roll.
He definitely needs some help. He probably needs some help. I mean, I called him twice yesterday. He didn't call me back. So either he's forgot about Kris, or he's just super busy.
He's with his family right now.
Yeah. So
all right. So I wanted to talk about a private investment, and then we can roll into Kris's agenda. So I want your opinions on this. I'm going to say it publicly. I got invited to get in on SpaceX. The group does not know the valuation. I'm not going to say who it's from or anything like that, but the details are getting finalized this week. If you guys had the opportunity to invest in SpaceX privately before the IPO, would you?
Probably not.
Maddie, would you?
I'm curious about what Steven or what Amit's reasoning.
Amit, Kris, right?
Pretty hard for Amit since he's not here, Maddie.
So the reason why I would not is because it's really hard. Like right now, we don't know any details, so it's really hard to say like what to value this company at current point. Like, do you guys know what revenues they're doing, what ops income they're doing, their capex, anything, right? You don't really know. Now, here's the thing: if you get in right now, and then all of a sudden you look at the numbers and the IPO's just not as good, what are you going to do then, right? And a lot of times these companies, when they come out, I mean, me and Matt were just talking about this earlier. A lot of times when companies come out, they come out with the rosiest expectations alive, and they do phenomenal during the IPO. And then they have these giant retracements down 50-60%. And sometimes, when I think about it, I'm looking at this general market. I'm just looking at the market and saying, look, the valuations are just really, really stretched. So it's actually smart for them to IPO while valuations are stretched and people are willing to overpay for shares. So in that context, I know a lot of companies are coming out right now saying, you know, and I do want to buy into SpaceX. Don't get me wrong, but just I want to know what their actual numbers look like. And then what I want to do is I want to wait for a meaningful pullback where confidence kind of goes out the door, and hopefully the economy kind of like corrects things a little bit, because I think valuations have to correct, in which case then it'll be a much better time to buy it. You know, and the other thing is with businesses like that, I think there's a lot more cyclicality to it than that's being let on. It's very capital intensive business. They do have probably some meaningful revenue coming in from Starlink, but once again, we'd have to really look at the numbers to determine where we want to be. So
I'm going to read you the first part of the text. So I'm going to be very vague in certain things. I'm part of one of my friends' father-in-law has an investment group. Let's just leave it at that. So he texted me privately because I missed the message. I actually got invited because they wanted me to join because of all the Seeking Alpha stuff that I write. And he said, "Good evening. I just wanted to let you know that I've come across SpaceX pre-IPO shares for $275. Our whole group is piled into this, and I wanted to let you know in case you're interested. It is rather unique and life-changing experience. This is what our investors have put between X amount and Z amount. I'm not going to say the amounts. And all I know is that my friend has done 3 or 4 of these deals so far, and he's done very well on them. So I absolutely trust the source." I texted him back privately today because I missed the text last night, and asked him if he knows what the valuation is. And he said, "I have no idea what the valuation is. I'm working out a few details." They don't even know where I need to send the money to or how I'm going to get the shares, et cetera, et cetera. But my biggest thing is this going to come with a lockup period or not? Because if it doesn't come with a lockup period, I'm probably going to do it. If it does, I'm probably going to have second thoughts. But
yeah, I think
Is
it
there a
depends.
fee?
Like, sorry, go ahead. Sorry.
I don't know any
No, I was
details. They're getting me the details.
Yeah. No, I was going to say, is there a fee? Because, you know, with these SPVs, there's a fee that they usually collect.
So all I know is it is not through a place like Equity Zen. It is actually through one of the larger financial institutions. That's all I know. I know
Like
no
Sequoia or
details.
something.
He's working everything out. So I really don't know.
It would depend for me what the minimum is. Like if it was a minimum like 250,000, I'd probably be like, probably not. But I think when you asked me on the phone earlier, Steve, if it was like 10 grand or like 15 or 20 grand, I'd be like, you know what? For the success of the company, I would much rather spend the 10, 15, 20 grand to like ensure, or I know they don't need the 10, 15, 20 grand, but to feel like at least I'm part of space exploration, continuing on that journey and Mars and everything like that, I would almost as like a donation and whatever comes after that. But of course, if it's like actual real money, like something that I would be like tangible, like 250 grand or something like that, I'd be like, I'd rather just invest on my own. I can surpass. So, and also it also depends on what the fee is, right? If it's like a 2-3% fee, I'm cool with that. But if it's like hey, we're going to charge 30% on top of, you know, whatever, I haven't seen any deals like that, but then I'd be like, nah, we're good. But I think it all just depends, you know. But I think, you know, just doing some math, he said 275 a share. I think that they were thinking about when they just did this most recent, because I think what ends up happening for anybody that's not really paying attention, all this stuff is kind of illiquid, right? They generally will have like they'll have their funding rounds or A rounds, their B rounds, their C rounds of kind of going for capital, and then they'll have their internal sort of thing where people can buy and sell each other shares, or you know, get out, because a lot of these people in startups they get paid via stock-based compensation. And so when there's no stock market, you know, there's no open public market that you can just say, hey, you know, Billy Bob Thornton wants to buy your shares, here you go. You have to find your individual buyer, right? So like if I owned, let's just say 1% of AK Media and I wanted to sell it, I'd be like, hey, Kris, like, do you want to buy it? Like I'd actually have to find a physical person to transfer those shares to. And so from what I'm understanding, Steve, the shares were selling upwards of $350 a share, and that was kind of like the $600 to $800 billion market cap that they were throwing around. And so let's just take the upper end of that. Let's say that 350 a share was the 800 billion. Then this 275 a share would kind of equate to the 625 billion. So, or maybe even lower. I guess it really just depends on what that 350 a share that they were throwing around kind of equates to. So anyway, I mean, at 625 billion, I mean, if they actually do go public at 1.5 and it does drop by 60%, you'd still be okay. But anyway, just some thoughts.
Yeah, I need once I get the details, I'll let you guys know and I'll figure it out. I'm hoping to have the details this week. So
yeah, that'd be awesome.
All right. There's a bunch of economic stuff coming up this week. Kris, I know Matt said that you had an agenda. What do you want to discuss?
So one of the things, and I'm glad Matt brought up liquidity, right? Or illiquidity. I think one of the challenges that we might be sort of seeing in the market right now is with this whole thing with private equity, about mark to market, about what the actual value of some of this private equity paper that's out there is, and what's actually being financed, and what's the price that people would normally like pay for some of these assets that are underlying it. So it's something that's a challenge right now, and it could theoretically become a problem. I don't know how big of a problem it could be. I've been kind of talking about it for the last 6-7 months, but I'm trying to deep dive into a lot of these private equity deals that a lot of these companies made, and it's not looking too good, you know? So if we do get sort of a, I don't want to say recession, but if we do get a recession, a lot of these companies they're going to be hit hard, and they're going to struggle. Now, one of the ways that you could kind of like fix it before the problem gets bigger is by lowering interest rates, which is what the Fed should be doing, in my opinion, next year. So I'm looking out for credit events right now, because if you think about it, every time that there's been like a pop of a bubble, it's typically been led by some sort of credit event. And I think a lot of times people are looking at AI right now and saying AI is a bubble. And I'm asking like, okay, so where's the bubble? Like what part of it is it? And everyone just keeps pointing to all the CapEx that's happening, and they're pointing to all the debt that's being taken on and saying that's a clear sign that there's a bubble. And I'll take the under of that, and I'll say that I don't necessarily think that that's the case. I think there's still quite some time to go before the quote unquote the bubble pops. But yeah, like I said, I'm not seeing it. Are you guys seeing it?
Steven.
I was actually trying to get a transcript of something. I'm not seeing it, but did you listen to the All In podcast this week? It was either this week or last week, where they were talking about the new proposition that's being voted on in California. I think it was a 5% wealth tax across the board, or something with private companies, where they were talking about each one of them would have to sell off X amount of their private companies to raise capital. And if they go into this route of taxation, it could very well cause individuals with high net worths to stop building businesses and just retire, because exactly what Kris said, with illiquidity, you can't just sell it on the open market for fair value. You're likely to take a 20, 30, 40, 50% drawdown to raise liquidity if you don't just have the cash laying around, because there is no market for it. So it's going to trade at a discount.
Well, I thought it was a little bit more nuanced than that. I thought it was around, if you like right now with loans, right? Like a lot of these businesses and a lot of these people are doing loans, and they're saying, look, I have $5 billion worth of equity in this company. Give me a 5% loan, right? And so business, instead of basically, instead of selling the asset to take on, to basically liquefy and pay taxes on that sale, because now you have a giant gain of sale and you have to pay taxes on it, they're essentially just using that as debt. So California says, no, we're not gonna, we want to get around that by basically saying every time you lend money, like you lend your shares, you get a loan for it, that they're going to charge you for that. Let me just see if I can find it.
So is this like just a California thing, or is this like a everybody thing?
No, it's a California thing.
Oh, then who gives a shit?
But to Chris's point, I'm not seeing anything, but I'm also not in the private markets. Now, that's always a problem with the private markets, that you're not able to sell things at fair value. So it could become a problem.
They do that, then watch how many businesses and people leave California.
All right, here we go. So I got a bunch of it. So Tremont was expressing severe concerns regarding proposed California wealth taxes, describing the potential impact on private companies and their founders as chaos. The commentary focused on logistical impossibility of taxing unrealized gains in illiquid assets and the dangerous precedent such legislation would set. It's basically a phantom tax on illiquid assets. And he specifically mentioned 5% tax on net worth. And it would devastate founders and investors whose wealth is tied up in private companies. And think about how many companies started as private companies and then became public, and how many of them started in California. Like, that could legitimately be a big problem for the future.
If that happens, you're going to see a max exodus to Austin and many these other more business friendly environments. I mean, you've already started to see it with Tesla moving their headquarters, right? I mean, yes, they have a subsidiary office in say California, but you know, you've seen massive companies that are very focused on progressing forward, like SpaceX. You've seen
Oracle.
You've seen Oracle move out. You've seen Palantir move out. You've seen Tesla move out. Hewlett Packard move out. So you're already starting to see this max exodus of companies outside of California. At what point do they realize that they're going to be a shrinking economy? That's a good question. I don't know. I haven't seen the numbers lately as to the growth and trajectory of GDP of California versus where they're exodusing to. I mean, I would be cautiously optimistic that the pace that's GDP growth in Texas has probably grown much faster than it has in California. But I could be completely wrong, considering you do still have giants like Google and many others still in California.
So they also went down this path, and this is where I start to get worried. And while granted, this is only California at the moment, this is only on individuals with a net worth of over 100 million, and the legislation would grant the California state legislator the authority to adjust value levels and rates in the future. So I can completely see a point where, we need more revenue. Let's jump this down to 10 million net worth, and then 5 million, then $1 million. And then do you consider, or not us, but do they consider the legislators 401k plans part of net worth? And I just think this is a very slippery slope, and I do not want this to pass, even though it probably will, because it's California, because I think it sets a very scary precedent for the future with what happens with taxation.
Yeah, I mean, the challenge that you run into all the time with this is that where does it stop? The first time it goes through, it's like, oh, it worked. Look, we have more money to pay for these services, and then the services get embedded in the sauce, right? And then the expectation is every 5 years we'll just soak them again, and then another 5 years we'll soak them again, and so the entire system becomes dependent on the soaking instead of becoming more efficient, right? So this is the challenge. Every time you raise taxes, you also raise spending. And then there's no did you guys see the whole thing with, I think this was a while ago, that they spent like $5 million on a public toilet or something like that in California? Like $5 million on a toilet. And then they have how many billions of dollars that they spent on that high-speed railway system that
that
went to nowhere. It's like, yep. It's like, so the question is, why do people keep voting for this, knowing that these people waste so much money on BS? And it's like, I don't know. Either so much of the state is on the take that like that they're all like, okay, yeah, we can allow this to happen indefinitely, or it comes down to just how the demographics are changing, where the people that stay support all of these measures, and the people that leave don't support these measures, in which case now the total population, the concentration of people who support this kind of legislation keeps growing and growing and growing. You know,
I think it would be very scary for the stock market, only because I think it would put a lot of pressure on private companies, and a lot of companies have benefited from being private, then coming into the equity markets. So we'll see what happens. But to answer Chris's question, I'm not seeing liquidity strains in the market. This isn't the same thing as 2023, when people were worried about the banks taking the keys to real estate. I'm not seeing a debt problem in public companies at the moment, on the whole. There are some companies that have massive debt loads, but for the most part, I don't think that we have a debt problem in the public markets at the moment.
I mean, the only thing that you can highlight is what is it called? Is the whole Oracle CDS like argument, where CDS has been getting higher and higher every day because Oracle is just issuing so much debt. I'm sure that they'll eventually do an SPV deal with a private equity company, in which case they'll sell majority of the capacity to them as a form of debt rather than equity, in which case they'll retain the equity share. The private equity will get the debt share, and they'll cut it up in a nice way to let Oracle maintain their investment. I don't even think they're investment grade anymore. I think
that was one of the big concerns, that the amount of debt that they put on, and the city note about how much debt that they need to issue over the next 3 years would make them not investment grade anymore because of the negative net liquidity position.
Yeah. I have to see what the terms of these deals are that these guys are willing to spend all this CapEx. I mean, the question that always comes to mind is, well, Oracle is doing this, Oracle is doing that, and they're contracting with Microsoft and Meta and and Google and everyone else. So it's like, why doesn't just Microsoft build their own data center? Why doesn't Google just build their own data center? And why doesn't Meta just build their own data center? Why do you have to buy capacity from Oracle? Right? Like, I know the answer to it. It's just, it's a very weird situation. So I don't know. Liquidity is one of those things that if you have it, it can really help you build a business. And if you don't have it, it can actually crush you. So, yeah.
So what do you think here, Kris? Do you think that Oracle's RPO is going to materialize into revenue over the next 3 to 5 years?
Yeah, 100%. The counterparties are too strong. The demand for services is too strong. The question is, what's the ROI for Oracle shareholders by filling those RPOs? I'm sure that Larry Ellison wouldn't do these deals unless he had some guarantees and assurances where he got a pretty good margin from these deals. The challenge that you run into is that the largest one of these RPOs is OpenAI. So if anything happens to OpenAI and they don't get funded, or OpenAI can't live up to their obligations, then, it kind of screws up the whole thing. So I trust Microsoft, I trust Amazon, I trust all these other guys that they've partnered with. I'm not so sure I can trust OpenAI, only because, like, you can see what's happening right now with Gemini and OpenAI and Anthropic and all these guys, where they're all competing against each other. And if you compete away all the profits, then who's going to pay for that capacity in the future, right? In which case, if something happens to OpenAI, now Oracle is sitting there with a bunch of CapEx investing that they've done, and they've got to fill a $300 billion RPO gap.
Matt, do you think that Gemini is going to be free eventually from Alphabet, and they're going to look at this as a way just to monetize more advertising revenue, so they squeeze OpenAI and really put the screws to them?
I'm confused by the way you worded that. Free? What do you mean by free?
So right now you have the paid version for the bigger model with the $20 package per month. And you get all the other stuff, the additional storage, et cetera, et cetera. do you think that they say, you know what, this is ChatGPT's main revenue driver, really their only revenue driver at the moment? What if we gave the best model and all the capacity away for free on Gemini, the way that we do with search, and then add revenue into it to put the screws to ChatGPT? Because right now they're unprofitable. And if they have to fight against a most powerful version of Gemini free, that would really hurt them a lot, I think.
Well, I thought you meant by free, like it was going to be some sort of subsidiary or completely like
No.
sort of organization. I mean, you already kind of have that, right? There is a free Gemini out there. I feel like they're probably going to utilize what they've done with YouTube, right? They have a YouTube free version, but then you have more premium sort of services like you're paying for, Steve, with the premium, where you have access to the better, picture outputs and thumbnail outputs, etc. That otherwise you wouldn't be able to get on the free version and or ad free. So I think that you'll have this ability, and this is where I've always gone with these sorts of things. Like when everyone was starting to say Google is going to zero, when everybody thought that ChatGPT was going to completely take over, which they have for quite some time of this entirety. They still have the market share, but slowly decreasing. My thought process is that they were always going to have some sort of advertising in this to be able to make some money off of. It's just searched by different means, right? So it's nothing that's changed really. It's just the mode of which it's being searched is different and likely slightly more intelligent compared to what the algorithms that have been used in the past. So I don't think it's going to be any different. I mean, I think it's going to be about the same. There's going to be minor changes. How intense the advertisements get, I guess, is really the question. But I'm sure it's going to be very comparable to what we see with YouTube and YouTube Premium, right? Like a lot of people probably on here watching aren't using YouTube Premium, but still able to utilize the service. I feel like it's probably going to be comparable to something like that.
Yeah, it's gonna be. I think one of the challenges is when people call for a bubble, like it's so obvious there's an AI bubble. I don't think that that's usually the case. I think this was documented in 1997 when everyone said tech was a bubble, and then we rallied for another 2 years, and then eventually the tech bubble burst. But if there is a bubble, I'm not seeing it at this exact moment. There probably are some companies that have valuations that are stretched. And I think those could be a challenge, but that's at the periphery, not necessarily on the top 5-6 companies that are just on another level of cash flow. So they can support the CapEx pretty easily. So, yeah.
I mean, look, when it comes down to a bubble, this isn't 2000. This isn't 1999. This is not venture debt fueling everything. Now, Alphabet is certainly scaring people and stoking the flames again with those comments because they're taking out a massive amount of debt compared to the hyperscalers. But the companies like SMR and Oklo that are
wait, can you repeat that? Can you repeat that? What did you say before?
So,
like,
so Oracle is stoking the flames because they now have 99 billion in debt. Or Alphabet, Meta, Microsoft, and Amazon are not fueling this from debt. They're fueling it from cash from operations, and their debt loads, they don't even have to touch their long-term investments. They have enough cash on hand where they can write a check and eliminate 100% of their long-term debt. So there's not a bubble right now. And there's always segments of the market that get expensive. There are always companies that run too far ahead on valuation. And companies like Oklo and SMR that people piled into, pre-revenue and pre-earnings, no shit, they're going to get chopped in half. That doesn't mean that there's a bubble. People getting into high beta names have to realize that these companies are not in the S&P. These companies have no bearing on the market. And if you're going in on these companies on leverage, you're feeling like there's a bubble when they get a huge drawdown. But that's not the largest companies leading the market higher. and leading the AI revolution. And is Palantir's valuation excessive? I think so. But if you read the Q3 print, it's one of the greatest quarters any company's ever put up. And there's a real argument to be made about how big this company can get in the next 5 or 10 years. Because in the next 10 years, I think it's absolutely going to be larger than what it is today. So I'm not seeing, in a world where these companies are putting up tremendous amounts of EBITDA, cash from operations, and even net income, how is this a bubble? I'm not seeing it.
I think this a combination of circular financing, valuation hypes, all those things are probably just making people nervous. But I stopped you before, by the way, because I thought you said Alphabet instead of Oracle. So I was like, huh? Wait a second. So, but you're right. Oracle is probably what's scaring everyone, just how much they're spending on the build out and how much that could end up translating into, well, the lack of future ROI is what people are worried about. So, yeah.
So I wanted to ask both of you guys about the bottom 493. Do we think that 2026, we're going to see a broad market rally and a lot of these companies increase productivity gains and expand margins from robotics and AI? Matt, what do you think?
I don't know. I haven't really put much thought into it. I mean, where I've been looking at is what items will be directly impacted versus like what companies will potentially be needed to build out the data centers. What will actually be kind of second degree or third degree of these sorts of movements and efficiencies. Everyone's kind of talking about the utility piece and what companies will benefit from that, whether that's oil and gas, whether that's nuclear, whether that's just normal utility grid sort of companies and infrastructure companies. I've also been thinking about what about electrical companies, what about plumbing companies, all these, because one of two things, right? You're either going to have so many people that are going to need to either build these data centers, which obviously electrical components will be a big piece of, and plumbing, of course, if you're building more infrastructure. Or secondly, a lot of people, I think, will have to trade what they currently do, which is mostly bullshit, easy to replace AI work, into something that is tangible, like tradesmanship, like plumbing, electric, sort of stuff. And I think that's why you've had these private equity firms so hyper focused on purchasing these things off the private market, is because they see that eventually these are going to be the places that they can really benefit. And I think that those are the things that are going to have a lot of premium kind of going forward. I don't think that those things go away, right? So having the ability to then conglomeratize those opportunities, which are currently disparate, I think the people are seeing a lot of value. So to me, I'm looking at and been searching for anything in that respect. And then also anything to do with robotics is not in that top 10 of the S&P 500, to see what things are kind of being worked on, what companies are innovating in that 493, and which ones could eventually sneak up into that top 10 as they kind of progress into the 2030s and beyond. Because there's certain companies that are embracing it. There's certain companies that are recognizing that, hey, we sat on the fat of our laurels and all that stuff from the old 80s sort of mentality of shareholder supremacy, give as much cash holder returns, etc., back to the shareholder. But there's so much efficiency to be said. Like, you don't need 10,000 branches of Wells Fargo across the United States. Like things like that, where you're just sitting there to try to understand, why is this economic footprint so expansive for JP Morgan, Wells Fargo, all these different companies that have just been kind of utilizing the same business plan. They have not innovated. I think they either need to innovate or they're likely to die, and their margins are going to get squeezed to oblivion, and they'll eventually cease to exist or get bought out for pennies on the dollar. So I don't know. That's what I'm thinking. So I'm trying to find the companies that are excited, they're innovative, they're potentially picking up things like Palantir to help reinvigorate and understand their business a lot more. Because I think at the moment you've just had a lot of zombie companies that are just they're not going to zero or anything like that, but they're just churning out and they're not really wanting to grow. The management is just about keeping the ball in the air, and they're not really about rocking the boat and making things better, right? You don't have a Steve Jobs at the helm to kind of show a vision about, changing the company, or you don't have a Sundar Pichai to kind of continue that progress and carry the baton forward. You kind of just have these executives that are happy with their multi-million-dollar paydays, and as long as they get to fly around in business class and be happy, they're fine with it. So to me, you need somebody that is visionary and has kind of like a long term as to where they want to go, and isn't about just keeping the ball in the air.
Kris, what do you think? Do you think there's going to be potential for a broad market rally in 26?
It's definitely possible. I'm looking at a lot of, valuations on pretty much every sector are high, but then there's pockets of value that might become more popular. So there's this saying where during bull markets, growth is the most important thing, and during bear markets, the value is the most important thing. And so if we do enter into like a prolonged bear cycle, if this whole AI thing blows up, then people will of course naturally rotate into less growthy parts of the market, in which case they'll probably hide out in value. The other thing is a lot of value companies, they'll benefit significantly from rate cuts. So small and mid caps that have a lot of leverage on their balance sheets, if you give like a 200 basis points cut to their interest charges, it's a big margin improvement for them, in which case their profitability goes up, share prices go up, so on and so forth. Like, I'll give you an example. Earlier this year, everyone was down on the managed healthcare sector, and managed healthcare sector has been rocking. Like, we could take a look at some of these companies real quick. Let me just pull it up. And each one, I think, has still some room to go for a nice long-tailed recovery. The one that I had my money in was UNH, of course, but then there's one that me and Matt spoke about, Elevance, ELV. That's been recovering nicely. CNC's been doing good as well, Centene and Molina. Let me just pull them all up. See, and Humana. Humana hasn't been doing that well. Just keep that one up for now. Let me just do stock price. Stock price. Okay, there we go.
You want me to show your screen?
Yeah, there we go. Perfect. So these are the stock prices for the health insurance companies. Health insurance after 2016 kind of just been on a nice upward trajectory. They have low margins, but they have a lot of share buybacks in them. And then kind of like the V28 changes came along and some of the businesses got disrupted a little bit, and they all priced their premiums too low for the what is that thing called? Let me just do it by company actually, because otherwise it'll look weird. So you can see kind of they're recovering right now. So we had United drop all the way to 237. Right now it's back to 341. I personally think that getting to that $500, $600 level in the next couple of years is going to be more challenging, but getting to that $400 level, it's definitely a possibility as they improve their MCR rates. You can see the same thing with Elevance. Elevance kind of fell off from like 562 all the way down to 274. And since then it's back up to 359. It's got the possibility. And unlike United Healthcare, which had some challenges, Elevance is actually not that bad. Like they're pretty good in their guidance. Centene took an absolute nosedive to 28. Now they're up to 40.85. And Molina went from, like I said, all the way high of 414 in 2014 to like 150. So over time, these things are going to recover, and they're going to recover nicely. So if you were to ask me like, hey, where would you want to hide out outside of general AI? I think there's good mean reversion potentials for most of these healthcare names, but you have to be very, very specific on which ones you want to touch. They still have some hair on this dog, primarily from from like the premium increases that they put out, because all of them had to raise their premiums by double digits this year. And so you're going to see a lot of people on Twitter and on everywhere complain about it, of course, because, you know, who wants to pay more for health insurance? But the cost of healthcare has gone up. So if they overshoot on premium increases and healthcare cost inflation actually doesn't materialize, that just means that their margins are going to be fatter, in which case their stock prices will be higher.
So I'm looking at companies like Pepsi, trying to see if there's a play there. Pepsi is actually up 4.5% over the past 5 years. So I'm wondering if companies like that actually can rally in a broad market rally next year, the year after, in a lower rate environment, because we're getting paid 3.8% on it right now in the dividend.
I mean, yeah, it's rallied since June. It was down to 129. It's up to 150. This definitely is a little bit of rotation. You can see that there's been a rotation out of value into growth. I mean, is Pepsi technically value though?
I mean, according to State Street, probably not.
Let's not bring up State Street, man. Let's see.
What did I miss with State Street?
Oh, you got to show him.
Okay, so Maddie,
sorry, the heat is out at one of the rentals, so I had to call in a repair guy.
This is
see what I mean? I don't like renting. That's right.
Hey man, it pays for it's my mom's, you know, and it literally pays for her to live. So gotta do it.
No, listen, you've got the patience for it. You're a good guy. You know how to deal with it, man. Like I said, I hate dealing with the stress of tenants. You know, like I said, you have way more what is that thing called? Like tolerance for the BS, basically.
It happens.
All right, Matt. So I have not showed you the State Street Value Fund, have I?
No, not the value fund.
What do you think State Street, the Spider Value Index on the S&P, what do you think they consider value before I show you?
Probably Apple.
You know, some would say that you either have it up or I've told you already. But yes, Apple, Microsoft, and Amazon are their top three. And for some reason, AMD is numbered 9.
That's definitely not value.
A little interesting. I mean, they had 396 holdings. What are they getting rid of? The things that don't have a dividend? But then Amazon wouldn't be in there.
AMD doesn't have a dividend.
I mean, they have like 400 some stonks in here. They need to do better.
I mean, look, I think that Microsoft and Amazon traded interesting valuations. I wouldn't consider them value companies.
For a second, I was reading Total as Total, like Total Energies.
Thank you.
Interesting.
Well, I mean, there's your problem with Pepsi. Their growth rate is basically gone down to next to nothing. I mean, look at this.
That's why there was a activist come in, because of exactly that.
I think it goes back to what you were talking about with GLP-1s and stuff, Chris. I think there's a huge push right now to get rid of sugar water and snacks, and you've seen Pepsi try to diversify through picking up like beef jerky companies and more healthy like snack companies than their previous Frito-Lay sort of companies. So,
well, we can look at their by segments, see which ones they're growing segments and which one are their. So these are their different segments. Maybe they stopped reporting here, but this yellow is Latin America. They've been dropping off in Latin America. They've been flat. No, this is operating margin. Let me get rid of that actually. Total revenues, get rid of this. Okay. I mean, this looks like they're across the board having problems. Look at this. Latin America revenue went from 20% growth to now 0. Africa has been slowly recovering. Quaker Foods is down double digits. Yeah, this is not a. Oof, this is not a good sign, man.
I mean, people love oatmeal, but they're ordering these ready out shit from Instagram and overnight oat stuff from Instagram instead of Quaker.
Pepsi
Yeah, I
doesn't
mean,
Quaker, do they? That's General Mills.
What's that?
Doesn't
no,
General
Quaker Oats is owned by Pepsi.
Is it?
Yeah.
Why did I think General Mills owned them?
But yeah, this business is definitely not on the like. I mean, it deserves a value multiple. So I mean, I wonder what multiple these guys have right now on a forward basis. Let's see.
I mean, they're trading at 18.5 times this year's earnings.
That's still high for a company that's not growing. Yeah, man, I wouldn't touch this. Not my thing. Yeah, no.
So Matt and Kris, where do you think we can squeeze value out of next year if we're going to get a value play?
I mean, the only thing I told you, like healthcare is the only thing that I think there's like a mean reversion play that we could do. I mean, if you look at regional banks with KRE is already kind of like recovered nicely. I mean, you can see TFC, which I spoke about like a couple of years back. They've been one of the beneficiaries of the rate cuts in that their AOCI losses have gone down materially. So you can see here the stock price. Let me just bring it up. Sorry.
Yeah, we're a hair away from 50. And
give me some regional banks. Give me some regional banks that you guys like.
Huntington Bank, HBAN, Truist.
Guys in the chat, give me some regional banks so we could take a look at them together.
KeyBank.
That's right. Key is one of the big ones.
UBS. That's a big regional one.
UBS? No, that's Switzerland.
They're not
USB. US Bank. US Bank Corp. Yeah.
Citizens Financial.
Citizens.
You already got regions. Citizens.
Valley National.
Citizens is who I have a lot of my mortgages through. They fucking suck.
Citizens. No, not BB&T. BB&T got acquired by SunTrust, and that's what turned into Truist. I'm trying to think any other ones.
CCFM.
Wells Fargo. Oh, Bank of Ozark. OZK.
Yeah.
OZK.
Bank of Hawaii. Bank of Alaska.
Fifth Third, and Zion. And I'll put those on there as well. Zion is one, and then
Put Bank of Hawaii on there. Humor me.
Okay. Bank of Hawaii. Bank of Hawaii Corporation, BOH.
That's a PPCE in favorite.
Really?
Yeah.
Okay, so I'm gonna get down to Q1. Actually, like Q2. The regional banking crisis happened here in May, and since then, since November 23rd. Truist was down to like 27. It's gotten to almost $50, so it's like doubled. Regions went from $14 to now almost 28, so that's doubled. Key Corp, look at this. Key Corp at one point was $9, now it's 20, so it's doubled. Citizens went from at one point 23 to now 58. Look at this. Every single one has. I don't know why this is not showing up. Zion's is right here. Zion at one point is 23. Now it's 50, 56, 50, 58. Bank of Hawaii is 69. They went all the way down to 37. Oh, and what about Steven's favorite, Flagstar?
Flagstar's doing nothing.
Flagstar. Let's see. Where's it? Flagstar Corp, right? Yeah.
FLJ.
Yeah. Flagstar
trading way under book value.
I don't even see Flagstar here. Yeah,
maybe the wrong one. That's the wrong one. That's FBC. It's FLG.
FLG.
Okay, FLG. Got it. It's not low. It hasn't loaded. Maybe that's why. Maybe refresh. Yeah, man. So I think healthcare, managed healthcare is in the same boat. You give it a couple of years, the bank, the healthcare companies will figure their stuff out, and we'll be fine. I gotta maybe get rid of some of these. Maybe that's why.
What do you think of Oscar, Kris?
Oscar, they're good if the subsidies get extended, but I don't know. It's going to be difficult to see where they end up. Flagstar right here. Woo. $12.87. I mean, it's recovering a little bit, right? It depends on where your entry is. We could take a look together if you want to do like an analysis on these guys.
I mean, I've been looking into Flagstar here and there. I think that there's a big worry about New York multifamily real estate that they're tied to at the moment. And I think it's going to take a couple of months to shake out to see where the new administration in New York, where their actual policies are. So I think people just don't want to go near, which would be an interesting time to get in if we think it's going to work out, because it's the tangible book on Flagstar, I believe, was around 17. I'll tell you right now.
Take a look at it. Let's see.
So book value on Flagstar is 1830. Tangible book value is 1732. So there's a huge spread between the share price and the tangible book.
The hell is it? Would it be on the cash flow statement? No.
It's on the
balance sheet and liabilities, equity. I don't see tangible book here for some reason. Common equity, or probably in the ratios.
Right, 1732, Kris.
Okay, let me see margins, capital efficiency, financial health, total debt, debt to equity. I don't know. I have to find it. Or actually, you could search for it right here. Tangible assets, right? No, it would be tangible book value. There we go. So tangible book value is about 7.7 billion. What's the current market cap?
The current market cap is 5.35.
Interesting.
So we're paying under tangible book, which is interesting. The question is, are they going to become another Silicon Valley bank or not? And with Mnuchin and the team behind it, I don't think so. But I'm uncertain about what laws and regulations are going to come out of New York City in regards to multifamily rent freezes, that type of stuff. And I think that's why this is not going to rally at the moment, because it's just tied to too much of the headline.
So for anyone here in the chat, so when you look at a bank, right? I look at Western Alliance and some of the other ones in a bit, guys. I know everyone's been spamming their favorite, what is it called? Their regional bank. But the tangible book went from 36 to 18. What do they have on their balance sheet that's been like? Do they have a lot of AOCI losses on there?
I think that when they did the merger, they spun a few assets out.
Okay, that's a good look at.
Because remember, New York Community Bank and Flagstar, they merged in 2022 or 23, I think, and then they added assets from Silicon Valley also.
I mean, there you go. This is. They probably have a lot of shitty debt on their balance sheets. Like basically when you lend out money at a really low rate, and you have to borrow at a high price, you create something called an AOCI loss. I think that's what's probably holding these guys back. They probably have a lot of shitty loans on the balance sheets with New York City, right?
Yes.
See, that's the problem. If you try to sell those buildings, I'm not so sure you'd get that much out of it, because all the what are they called? All those properties are all rent regulated. Like, which landlord would come in there and say, yeah, I'm going to buy this property?
That's why it's trading at a discount. And I don't know if it's even worth it at this point.
Huh. I mean, their CET1 ratios are good. Look at this. That's really good. Mortgage, change over your deposits. I don't know. I'll have to research this one more. But CRE exposure is not bad. Year-to-date payoffs is 2.8 billion. Total CRE here. Okay. Reducing multifamily exposure. Look at this. So maybe this is actually good. Pier 5. NYC multifamily portfolio. Okay, here it is. This is what's important. Book balance sheet. Proactive and rent regulated portfolio. So you see this guy's right here. Proactive management of rent regulated portfolio, 1.1 billion in payoffs in the last 15 months, 65% from substandard. Yeah, I'll have to really analyze the crap out of this thing, but this is not good. This is like their garbage. This is like the trash assets that they have on the balance sheet. No one's going to touch this stuff. But in terms of solvency, these guys don't have a solvency problem at all, which was the issue with Silicon Valley Bank. So this is where you're getting your tangible book right here. So this is the challenge that everyone runs into, right? With mark to market. So imagine right now I have this, okay, I have this gold bar, okay? How much would you pay for this gold bar, Stephen?
Well,
yes, Stephen.
It depends. How heavy is it?
It's probably like
We're talking
10
pounds?
ounces. It's probably 10 ounces, maybe. Yeah.
10 ounces? I mean, at spot, what would that be? 46 grand or so?
46 grand. You would pay 46 grand for this block?
Well, I'm just saying, let me go to JM Bullion.
You don't have to. It's not real. It's not real. I got this at the Robin Hood Summit event. It's just
43.13. So 10 ounces would be 43,000.
Yeah. But the point that I was trying to make is that everyone is going to see things differently. This could be a one of a kind something that I bought for 46,000, right? And now that I'm trying to offload it, it could be worth something completely different. The challenge is when you have a very illiquid market, even if you have like a real piece of gold and you're desperate, no one's going to give you full price. Everyone's going to give you undervalue and undercut you. So these guys eventually will have to figure out what to do with all those things. But until then, the market is discounting that. So yeah. Kris, you have scales within hand reach? No, I was just estimating. I don't know this.
This is rich. Y'all know.
I'm not rich. I don't have any gold. I don't have any gold like that. My mom does.
If I had Matt's money, I'd donate mine.
I keep saying that. Maddie's poor.
Matt, what companies are you looking into?
You already know, Steven. I'm buying them every time I get a chance. Tomorrow I have a whole set of paycheck, or a whole section of my paycheck dedicated to buy more Rocket Lab, Palantir, Venture Global, Next Decade, Amazon, Dutch Bros, Ethereum, Bitcoin, Northern Oil and Gas, Granite Ridge Resources. I think that's it. And S&P 500, of course.
Yeah.
Any questions?
I have so many questions for you.
Feel free.
So many questions. Around oil and gas, do you think prices are going to stay around where they are? Or do you think that we're going to see a rise to more 65 level next year?
Well, that's a different question. Are you asking specifically about oil prices, or are you asking?
Yeah, crude, not nat gas crude.
I think for now there's definitely a surplus, and the Middle East isn't even fully up and back to where they were pre-pandemic. So you have so much growth in the Permian and the rest of the United States, including the Eagle Ford and many others, coupled with growth in the Gulf of America and Guyana, that it's basically where OPEC trimmed all these particular disparate fields were able to grow production to offset it. So, and it's an interesting issue. So OPEC's had to eat it pretty much, and they're still curtailed. And there's some people that are still fighting it, like they're supposed to be curtailed, 1 million barrels, and they're only curtailed 500,000, etc. But I think that at the moment it's just too much oil at the moment.
I mean, that's deflationary, right? That's helps out the entire world economy. When oil prices and natural gas prices are lower, that means that the cost of transporting goods, producing goods, is much lower than it's been historically. So I don't know if the oil prices stay where they are. It could be a nice move down in terms of deflation. So I would say the trade for the next couple of years is, in my opinion, we're going to hit a disinflationary wave. I just don't see too many counterpoints against it. AI is going to cause a lot of productivity to boost. You've got deportations that are going to probably add to the aggregate demand destruction. Then, of course, you've got oil prices are low. I just don't see how we can get more inflation from here, unless businesses start to go extra hard and say, you know what, we're raising prices to get the tariff, headwind out of the way. But then you have the problem where unemployment's starting to rise. Consumers are weak, right? So what do you do then? I don't know.
I think, I see what you're saying. I was talking about this with a buddy. I feel like you'll have periods where the consumer is very strong, and you have, like, it seems like everything's somewhat cheap, right? Like, oh, like we could just spend money here, spend money there. I think now people are starting to really pinch their pockets a little bit, and they're starting to say, this is kind of getting out of control. And to be fair, I still think there's a lot of gouging out there. Like, I gauge things by chicken wings. I love chicken wings. Sorry. But like, if you go to the store, chicken wings actually aren't that expensive, but you go to the restaurants and they're fucking absurd. So it's one of those things where it's just like, all those sorts of things get factored in. Like, it just doesn't make sense why restaurants feel like they can be able to charge so many of these damn prices. But I agree with you. I think there is some sort of, I don't know if it's deflation per se, but disinflation likely. We're definitely seeing the pieces of that. But in terms of oil prices, going back to Steven's original question, I mean, I think that this is a reasonable price point for everybody. This $55 to $65, $70 window is very good for everybody. I think you're still able to make a good amount of money out of the Permian. You're still able to make a good amount of money out of the Gulf of America. So somebody said it in the chat very well. Like the last decade or 15 years, really it's been the last decade. The last, I would say, 12 years, pretty much since I joined the oil industry, has been a change in how businesses really do well. So to give everybody kind of like a thought process is, when a lot of projects kind of came on in the early 2000s, like oil was still like only $10, $20 a barrel. Like, it was very cheap. And you had pretty much all this price in oil increase from 2005-ish to 2008 really save a lot of these projects that were sanctioned in the early 2000s. And what ended up happening then is, because oil was, so expensive and people were able to make so much money, you had these mom and pop companies that were able to kind of come out of nowhere and really just drill as much as they could. And because of that, and everybody was making so much money, the banks lent them a lot of money. Well, in 2014, 2015, when oil went down to $28 a barrel, people were like, oh shit. And you had a lot of people with break-even costs at like $60, $70, $80 a barrel, because oil was over $100 a barrel. At one point, in 2008, it was over $140 a barrel. So everyone thought that oil at that time was going to go to $300 a barrel, and everybody can make money. And when that happens, you have the people like Schlumberger, Halliburton. They all raise their costs because demand for them goes up, right? So it's like your break evens all kind of go up as much as your oil price does. now we've been in this world where it's been so volatile over the past 10, 12 years that people are really hyper focusing on making sure that their debt load is less than what it used to be in the past. So most prudent oil companies were kind of operating more like pipeline companies, and Stephen will kind of get this more than anybody. Pipeline companies generally operate between a price to debt to EBITDA of like anywhere between 4 to 6 times, where they produce a crap ton of EBITDA, but if they needed to, they could pay it off over the course of however many 4 to 6 years. Oil companies are running something very comparable. Now, the nice thing that a lot of people are looking at is well, we don't ever want to get caught with our pants down again. So they're trying to get to something that's closer to 1 to 1.5 times debt to EBITDA, which is much less than what normal upstream companies have really focused on. So now you don't, I think, have this back like when we were in the 40s, $50 barrel range, like a couple years back. Everybody was running with their head chopped off because break-even costs were so expensive. Now the efficiency of some of these things, coupled with debt loads being so low, the break-even for a lot of these oil fields is much less than I think a lot of people give credit to. Guyana's break-evens are like in the mid-20s or 30s. The Gulf of America, a lot of those break-evens are in the 35 to 40s. So unless you have extremely old, aging infrastructure or very low production outputs, like some of these older facilities where you're paying $50 to $100 million a year to keep them up and running, you need kind of a minimum production cost to kind of keep it going. Generally speaking, everybody's making money right now, and it's a nice feedstock for the economy. So to me, I would hope that oil prices stay between 55 and 70. I think it's nice. I mean, everybody wants to pay 30 cents for a gallon of barrel of oil, but at the same time, you need to make some money. So to me, I think a lot of these companies right now are in a good sweet spot, and it really only gets troublesome once you get to the low 50s. High 40s in terms of because you have to pay for overhead and stuff like that. So at the individual field level, you might be making money at $35 or $40 a barrel. When you take into account all these expensive engineers like me that look after stuff in their fancy offices, and like to smoke fancy cigars and some nice old fashions on the weekend. That's where you end up having to pay an extra $5-10 a barrel to be able to keep that up, keep going.
So Matt and Kris, I want to show you something. So you guys know I like pipelines, and I think that they're going to catch a bid next year.
Mm-hmm.
Look at Energy Transfer's, and I did this because a lot of people want to see the debt included. So I'm looking at it on an EV to adjusted EBITDA in addition to market cap to adjusted EBITDA. So ET compared to Plains All American, Enterprise Product Partners, and then PLX. The reason I don't have Enbridge, Kinder, or 1OK in there is because those are C Corps, not MLPs.
Yeah.
ET is trading at a lower valuation than all of them. And then when I look at the market cap to distributable cash flow, ET is also the lowest. I got to tell you, I really like ET here at an 8% yield.
Phone home, Stephen.
This is not something that I think is going to 30 or 40, but my fair value on ET was about 1970. And I do think it's going to go into the low 20s next year. So this is something that I've been adding to just because there's no competition other than the current incumbents. We can't go raise capital and go build a pipeline company. We can go build a software company and compete, but we can't build a pipeline company.
Why not, Stephen? Let's try it.
You want to lose all your money on red tape and permits and
no, we'll buy existing pipelines. I ain't building pipelines.
Sure. Yeah. I mean, but think about it, that's what Buffett did. And Buffett's got the political capital and the monetary capital to get pipelines built. And instead of building new pipelines, they bought 7,700 miles of natural gas pipelines from Dominion in 2020. Now, I really think that as more data centers come on, and as we get more energy intensive in this country, we're going to see pipelines become more valuable. I mean, I had this thesis for a while and I've been incorrect on it. I do think it's going to play out though under this administration.
I got to get my father-in-law into some of this. I mean, this works for him because one, it's the way that it's structured. It's a K1, right? With capital return.
Energy transfer is a K1, yes.
Yeah, so it works for him. He's retired. He's got money. 8% is a good return for him not to, and he's sitting on liquidity. So he's basically been cycling through CDs. I'll probably get him into some of these MLPs. But take a look at inflation too, like on like the commodity level. Let me just bring that up. So right here, beef prices have been going up, and they're much higher than they were before. Can you share the screen real quick, Steven? Yeah. So this is beef prices, right? So beef prices prior to COVID were like 160 per 15 kilograms. The problem is there was like some kind of outbreak of like a specific fly or something from South America that like contaminated like herds here in the US. Let me just see beef fly South America. First travel associated right here, screwworm, human screwworm case connected to beef. And so I think they had to like cull the stock or something like that. Right here, New World screwworm. Burrow into the flesh of living animal. They cause serious, often deadly damage. So these were snuck in through the southern border, and it's kind of causing beef prices to go up. So one, beef prices are up not just because, I mean, they were already on a trajectory down, but then that happened and then things went up. Chicken, something very similar to happen with chicken as well. So you can see poultry prices where they had bird flu and they kind of went down, and it's kind of been lingering up here as they cull stocks and bringing it back down. But chicken prices have started to kind of rationalize around this $6 to $8 amount. Lumber has fallen off. Look at this. During the what is it called? During 2022, lumber prices shot up like crazy. Now they've stabilized back down to like normal pre-COVID levels. So home building should be okay now. Like the margin that some of these people were paying on lumber was insane. Now it's back to normal. What are some of the other main ones that we should look at? Cacao is actually coming down nicely. Thank God for West African rain. Has Hershey's been rallying against it? Let me see.
Good question.
Let me see.
Not really.
Cacao. Maybe that's actually a good place to look. HSY, because this has been one of their main problems. So Hershey stock it's rallying, but not a lot. It's up from 146 to now 184. Actually, it's not a bad time to look at Hershey's. But then like the other segments on Hershey's, we'd have to look at those to see what's going on.
So where's cocoa right now?
Coca right now is about 5,000. I mean,
So it's
6,000 right here.
Wow, it's come down a lot.
Yeah, dude. The
I have
last
not
couple
been following it.
It's not back to like pre-COVID levels around here, but it's on a way down.
Hold on. Hershey's is at 181. It's still down over the past year. On a year-to-date basis, it's up 7%, but over the past year, it's down 1%.
Let's see.
3%.
I mean, if cacao prices keep coming down, then this thing has a possibility of recovering nicely. But until then.
So what date are we getting next week? Or this week, I should say. So Thursday's a big day. We got CPI and core CPI. So we get the inflation read at 8:30 on Thursday. We're getting real earnings. We're getting initial jobless claims. We're getting the Philly Fed Manufacturing Index. We're getting, what else are we getting next week? Retail sales on Tuesday. Housing starts and building permits. I mean, where do you think CPI comes in, Matt? Do you think it's going to come in lower? Do you think it's going to be flat?
Wait, are they actually reporting it for November?
Yeah,
I thought they
it's on
didn't collect
Thursday
enough
the
data.
18th.
Okay, let's see.
I think it might be either flat or up slightly due to just normal. I feel like there's going to be like 4Q holiday sort of inflationary sort of looks to things, just like with normal. Then again, if you're looking year over year, I don't know. I think it'll stay at 2.8. To be honest, that's where it was last month, right? Or at least I don't think we saw anything for. Did we see? We didn't see for September, but we saw for October. Is that what it was? I forget what it was.
Yeah, I'm in that zone too. I agree with Matt. It'll probably be like 2.8, 2.9 for everything. 2.8 for CPI, 2.8, maybe 2.9 for core, 2.8 for PCE, and even core PCE is like 2.9.
I just don't think that we've seen the prices in groceries come down enough. Year over year, I mean, I don't know what oil price has done over the past trailing 12 months. I think it's come down quite a bit. So I think in terms of that, but you also have the offset of natural gas going up. So how much can you really rely on energy prices overall going down? I think that's going to be tough. And then I just don't think we've seen any real big change in the groceries of things. So
yeah.
What do you think, Steven?
Yeah. What do you think?
I think it's going to decline a tick, and I think that we're going to see a gradual decline into next year. I'm looking at where we are with what I've been spending on things. Everything seems like it's going down in price, especially gas. And while that's different, I have to think that if gas is coming down when we're not stripping it out on core on energy, and that's part of CPI, I got to think that it's going to be lower.
So here's if you want to take a look, here's where the inflation has basically been driven. This is in September, by the way. So the new updated data has not been published yet. So share the screen real quick, Steven, and we'll take a look. So all items together are about 3, right? This is September, mind you. Food, 3.1, food at home, 2.7, energy, 2.8, but that's mainly because natural gas prices have gone up. So you can see piped gas prices are up year over year by 11%. This is going to be a lot more. Because if you look at natural gas prices, they've really shot up. Let's see, new and used vehicles have been going up slightly, but new vehicles are flat year over year. Apparel is flat. Medical care services right here. So you can see the biggest one is shelter and medical care services, which I think with all the deportations, this medical care services one is probably going to go down next year. And then shelter is probably the same thing. And if you look at shelter CPI, it's been on a move down and change from a year ago. Look at this. Look at this move. 8% going this way, trajectory. So if this goes down to probably like 2.8, maybe like 2.6 by the end of next year, that means that everything.
Would really hope.
Yeah. I mean, what's the Fed projections inflation?
I'm bringing it up right now. I have it.
Okay, great.
So the Fed came out in their economic projections, and they had said that.
Here, share your screen, Steven. There you go.
Share your screen?
Yeah.
No,
not mine.
Share yours.
Oh, I'm just looking at notes from when I had ChatGPT analyze everything, so I had it in one place. It's GDP 1.7% this year, and then growth for next year 2.3%, and then 2% in 2027. And then CPI or PCE inflation, the median projection was 2.9% for this year, 2.4% for next year, and then 2.1% for 2027. And on core, 3% this year, 2.5% next year, and 2.1%, same as headline 2027. So Kris is right in there with what the Fed is projecting, which is interesting.
Yeah, this is the, if you share my screen, I have the projections right here for PCE inflation. So right here for 2025, everyone's assuming about 2.9. Some of them were hitting this range. And then 2026, PCE inflation is probably going to drop down here to 2.3, 2.5. So you can see majority of the thing is here. And then, of course, everything drops to normal by 2027. And 2028, it's normal. According to the Fed, core PCE is going to level off at 2.9, which is what we have right now. It's going to be by 2.5, yeah. And by 2028, normalized. December projections. This is for Fed funds rate, what the appropriate rate should be. So this is for 2025, which is what we have now. And then they're all over the place for 2026 on where they want it to be. But 2027, they're assuming about 100, maybe like 3 cuts in 2027. No, so 3 cuts in between 2026 and 2027, 3 cuts. And then
I think the big question
level
is,
off.
do we think that we're going to get a new Fed dot plot in the June or July meeting of 2026 once we've had a new Fed chair for a month or two?
Maybe.
Because the dot plot did not change after this meeting.
Yeah, maybe. Unless we have some, see, this is the challenge with projections. And I think this is where people have to give a little bit of grace to economic, the economists. Economists can only project based on today's events. They can't project based on tomorrow's events. So as an example, let's say tomorrow Saudi Arabia goes to war with Iran, and all of a sudden you got all that what is that thing called? That oil that goes offline all of a sudden. How do you factor for that as an economist?
For it. You just can't do it.
What if we get a massive bubble in AI burst, and all of a sudden now, millions of people lose their jobs? What happens? All of these projections go out the door, and the Fed has to cut 5 times next year. This is the challenge you run into with all of this stuff, where all these things are just projections. But that's the thing. That's why you have to constantly look at this to get an idea of where we're headed. The only thing that I know is that 2 years from now, I think home prices will probably be at the level that we're seeing today, maybe a little bit higher, but more than likely at the same level that we are seeing today. I think wages are probably going to go up by 3 to 4%. Home prices will stay flat, in which case now you'll have affordability again, right? Which would be the ideal situation for a lot of people, so that you don't have this massive decline in home prices, but at the same time, you've got people losing their jobs and losing equity in their homes. So I think this could be a nice soft landing for the economy, in which case we could end up at a nice 2% inflation target by the end of 2027, which I think right now we should be cutting of maybe 100 basis points by then. So for someone who wants to be risk averse, who's older right now, 50 plus, I would recommend a lot of bond buying. Why? Because usually what happens is you're going to be able to lock in those yields, especially long dated yields. You'll be able to lock in some good ones for a good, for a solid price. Same thing with what you said, Stephen. If you're getting 8% from ET right now, 8% doesn't seem like a lot when the federal, when you can keep your money in money market and get 5%. But if money market drops down to 2%, everyone's going to be screaming and wanting to say, hey, I need that yield. So
we're no longer in a T-bill and chill methodology. And there's still 7.5 trillion on the sidelines just in money markets. At some point, $1 trillion or 2 is coming back into equities. And when that happens, different story.
So someone put Oracle bonds on the chat. Dude, I was actually looking at some of those.
You and I were looking at those before any of this even happened.
I'm looking at them too, man. Take a look. so everyone here can see. So if you look at Oracle, their bonds going out, like the highest yield that you can get is almost a 7% yield on a 2026 bond. I wonder if it's callable. Let's see. Triple B, it is 6.1% fixed. You're getting to buy it at 90 cents on the dollar. Oh, it is callable. The call date is 3/26.
65?
I have to look at that. That doesn't make sense.
What?
Yeah, I have to look at this.
I mean, 40 years out, that's...
No, I mean, say the callable date is the same here. I mean, usually they have like an earlier date for call, but let me see.
I'm going to have to look at Oracle bonds again also. All right, let's do it. Matt, would you be buying bonds at all? Or are you not interested in it?
No, it really depends on whom it is. And I was just telling Kris as well, like I've started to come up with a strategy. You guys know I have some of the properties, and I've been like utilizing my 401k and some short-term kind of like soft bridge loans to be able to buy some of those properties. But now I'm 18 months in since the last purchase, and so I've paid all that off. Now the thing I'm focusing on now is any covered call income or cash secured put income that I have. I've been kind of putting in a separate account, and with that, and I have a separate tax account as well. And with that, I was telling Kris I've been buying more dividend focused stocks, and if the right opportunity for a bond came up, I would be all on it. It just really depends on what price and what yield it would be. Especially right now, like if there was something that was actually very good at like the 7-8% range, I think it wouldn't be too bad of an idea to buy it, especially if it's a decent handing stock, because as those interest rates go down, the value of that bond is only going to go up on face value. So yeah, I'm kind of curious if there's, and that's one of the beauties of Webull, right? That you can actually look at on Webull, like with ease, I think better than any other platform. What companies have what outstanding and what their what's the bond IDs? What are they called? ISBNs?
So actually,
QSIPs. Thank you.
Have Webull up right now.
Oh, Steven.
Kris put me on to Webull. And there's Oracle bonds right now trading at 62 cents on the dollar. How is that possible?
Yeah, because the coupon is probably low as fuck.
Yeah, the coupon's low as fuck, but who cares?
I care because I don't want to buy no 3.8% bond, man. Unless rates drop like crazy, this thing's not going to appreciate much. That's the problem, right? If you're looking for capital appreciation on that bond, you need rates to drop significantly to make that thing get back to par.
That's what it was. That's what it was. It was issued at 3.85%.
Yeah.
So in order for it to make sense at a 6.7% yield, they had to drop the price of it substantially.
Yeah. So right now, if you want, I'll tell you the one that you'd want to look at is as much duration as possible with the highest yield. Those all appreciate, which case I'm telling you, people are, if you got let's say a 6.25% coupon on a company like Oracle and rates drop to like
6.1% coupon trading at 88 cents on the dollar.
That's what I'm saying, that's what you want to look at. You're still going to get that 12 cents of capital appreciation when things get better. And then at the same time, you're getting a 6% yield. And remember, your cost base is that 88 cents. So your yield to maturity is like almost 7%.
And that going back to that one that was 3.85%, say it does actually, like the average, say, yield for Oracle can go back to 3-something%. You're able to get, and hopefully that 60 cents on the dollar goes back to $1.
Yeah.
Yeah. And that's part of what Kris got burned on back in the day. I don't know if people want to hear about that story again, but like you can look for these companies where you think, hey, like just like you can look at distressed stocks, you're like, the market's got this wrong. You could look at the same for bonds and say, the market's got this wrong. This company's not going bankrupt. Like why? And there is some reasons why, like some of them are trading for 90 cents or 80 cents on the dollar. That could just be because interest rates have gone up or down. But it could very well be as well that people don't have any confidence that the company will be able to pay it. And so they're just willing to get it off their books.
Well, there's another factor too, guys. Remember, some companies are worth buying their bonds because they can get acquired. And if they get acquired, then what happens is they go to par, right? So if you guys remember this one, share the screen real quick.
Yep.
1 second. Let me see if I can find it. Let me see some charts, man. You remember Tell Z?
Yeah.
Tell Z was
even,
awesome.
Yeah, but that's not even a thing anymore, right?
No, because they got bought up by Woodside. So look at what happened to Tell Z. Tell Z was almost an 8% coupon, so you could actually buy this on straight out on a brokerage platform. You don't have to buy it through a bond, but this was something called a baby bond. It was trading at $8. Okay, so you're looking at an $8, and the par is 25. Just think about that for 2 seconds, guys. That means that the yield on this thing, right, was 8%, 8.25. And if you bought it for $8.65, that's roughly like 3 times. So you're looking at almost a 24% yield, okay, on this. Woodside buys them. They have a change of control provision in their contract. These things go to par right away, and they get what is it called? They get called. And every holder got $25 for this. So you bought it at 8 and you got paid 25, 3x return. It's sad that when I saw this happen, I was sad for all the Tellurian shareholders, but I was super excited for everyone who held Tell Z. This was nice. So sometimes you can buy the bonds of a company that has really, really good assets that could get acquired. And what happens is that because of the change of control provisions in them, the bond shoots up. So let's look at like Warner Brothers Discovery, right? Warner Brothers Discovery has a crap ton of debt that they've had on their balance sheet. Look at this, right? All of this debt that they have on the balance sheet. I don't know if any of this stuff has change of call provisions on it, where if someone acquires them, automatically the bonds go to 100. So that's why they're trading at a discount right now. But one of the things is, if you look at like Warner Brothers Discovery, this bond, this gets converted into Netflix bonds if Netflix buys them. Yeah. Do you think Netflix has a much better credit rating than Warner Brothers Discovery? Yeah, obviously. So what do you think happens to these bonds? They go up in value. Right now, the yield to maturity is like 8.8% on them. And that's a 5.3% coupon. So I would say this might actually not be a bad idea to throw some money at just to check it out. Maybe this will be like a learning exercise. What do you guys think?
I haven't looked at the Warner Brothers bonds because I actually own shares. I don't know much. I got in the Spinco from AT&T, but I feel like the time has passed. I feel like when I was talking about over the summer, we should have just done it instead of waiting till now when it's already exploded.
Which one?
Well,
Warner Brother bonds.
The challenge that we'll run into with this one is that Netflix is not acquiring the whole company. They're doing a SpinCo. So if this Netflix stuff
gets the deal.
Yeah, if Netflix gets the deal. If these bonds end up in the SpinCo, then they're not going to be worth that much. Then they're not going to be Netflix bonds. They're going to be bonds for the new entity, which is the reason why they're probably trading at a discount right now. They're still trading at a discount.
Now, if Paramount gets the bid, they're paying $30 cash for everything. They're not spinning anything out. So,
which is interesting.
It's very interesting. It makes me think that they're going to get the deal.
I don't know.
So think about it like this, Kris.
Mm-hmm.
And Matt, I want to hear your opinion. So my tinfoil hat theory is that Larry Ellison came in, told the administration, don't worry, we're not going to spin out the legacy media. That way we're going to control CNN. We're going to gut it. We're going to change it. And it'll be favorable to the administration because did you see what capital firm came in under Ellison?
No.
Kushner's investment firm is now taking a piece of the debt under Ellison. So tinfoil hat Steve says, you know what? I don't think Netflix is going to get it. And I think Ellison's going to come over the top one more time. And I think he's going to say, you know what? That breakup fee that you have to pay Netflix, the $2.8 billion, we're going to give you $30 cash per share, and we're going to pay your breakup fee so you get your full 30. Tell Netflix to go kick rocks.
Yeah, but then Netflix would actually go up. I think Netflix, the stock would end up rising. What do you think,
Matt?
I think Netflix would end up rising actually, because it went down when all this was announced, didn't it?
Yeah, it went from $130 to now $90, $95. So we could see it re-rate back to like the hundreds again, at least like the 100 low, maybe like low 115, low 10, like 110s.
You got me thinking. How have these been trading? Let's see. I'm curious if they've been bought up. Let's see. Can you? Art. I mean, they were trading. Hold on, maybe I should share. They were trading. Can I do like a smaller range? Last year.
Look at this. Congress is buying Netflix stock.
Is it really?
Congressman buys Netflix stock before Warner Brothers Discovery buyout. Yeah. Cleo Fields, our boy Cleo. This dude has been on another level, man. He is one of the best. Like, I think he's gunning for Nancy Pelosi like returns. Do you know who I'm talking about? Cleo Fields.
No.
This guy. Once you see his picture, you'll know exactly who I'm talking about. Let's see. Right here, this guy. Show everyone, Steven. This guy, Cleo Fields. He bought almost. Look at this. What did he buy? Tell me to buy a put. What is it? What is transaction type? P.
Purchase, I think.
Purchase. Okay, good. I hope it's not like put. Yeah, my dude bought a bunch of Netflix. Dude, he's been having a really good year. He bought a lot of companies that have done really well. Look at this.
Hey, maybe I need to start. Maybe I need to start scraping some of these guys.
This guy's portfolio value is 240% higher.
I mean,
Cleo Fields was elected in 2004, sworn in January 25th. Since that, he's up 240%. I mean, if there was a guy who's like gunning for Nancy's level returns, this is the guy, man.
Well, go take all off. Look at the past 5 years. Look at that huge increase. I guess you can't, but click back on that. Look at the huge increase recently.
That's what I'm saying. He got elected in 2004, started in January 25. Since then, he's up 240%, dude.
It's insane.
Ahmed spoken about him a couple of times on his thing. He bought Celestica. He bought I mean, bro, this guy, Cleo Fields, goes on a Netflix buying spree. Oh, another one bought too. Michael McCall. So that pretty much, he bought Palantir. Representative Cleo Fields just bought Palantir. He bought Palantir. He has now bought 615. Man, how come I didn't know about this? Oh, well. Let's see. He bought Google before the run-up. Look at all the Google he bought before the run. Amazon. Should we buy some Netflix? He bought Iran in October. Did he buy United Healthcare? Please tell me he bought United Healthcare. He bought what's it, CoreWeave?
CoreWeave?
Yeah, CoreWeave, yeah. IREN. Yeah, my dude has done well, man. Celestica, he bought Apple, he bought Chipotle. Okay, so maybe he's not that great. T-bills, he bought NVIDIA. Purchased NVIDIA. All right. Yeah. Yeah, man, this guy's returns are just on another level. So him buying Netflix is a good sign. What do you guys think in the chat? Is Netflix worth buying because of Cleo? I forgot about Miss Cleo. You guys remember her?
Yes.
You know who that is, Matt? Miss Cleo?
Miss Cleo, man.
The Jamaican lady. Who in the chat remembers Miss Cleo? Miss Cleo.
The thing, I think I might make a, I might make a scraper. Like, there's a lot of good information out there that talks about like individual stock positions, but you don't see like a rolling. You don't like, yeah. I shouldn't say too much. I'll discuss with you guys offline, but I think that that's something that could be more useful than how people are currently. People are more like, oh, John Fetterman. It's like, I don't give a shit if like one particular person bought. What I care about is if a conglomerate or like a group of people or a whole committee of people bought something, right?
Yeah.
Like, I care about more how much total volume. Like, I don't care if one individual bought. I want to see if like everybody in Congress is buying Netflix, you know? Like if you just have one person, it's like they might just think, oh, this is a good purchase. But if you have a whole group of people at the same time, you know, that's much different. So
It's like consensus. That's consensus at that point.
yeah, you don't really have like you do at the moment. You just see like everyone's looking at how individual people are performing, like Miss Cleo.
Miss Cleo.
And I like him. He seems like a nice guy. Oh, dude, quick shout out for our channel. We got 5 gifted from Big Dick Doug.
Thanks, Doug.
Thanks,
Appreciate it.
Doug. You're the man, dude. I appreciate you as always.
Very nice, doggy.
But
That's gonna go into the VG fund, right?
Yeah,
Venture
the VG
Global.
fund, the Hembridge Cash Fund. Can you share my screen for a sec, going to finish that conversation on Warner Brothers? So for people to kind of get an idea, so like, okay, well, what's going on? This is the 5-year chart on that particular Warner Brothers Discovery 5.3 bond. I'm assuming it was a 30-year bond, probably issued in 2019. So because the expiry is May 15th of 2049. So I assume it was a 30-year bond. You can see it's trading for like 65 to 70 cents on the dollar. So the yield has obviously gone up to the 9%. But you can see before the announcement of the current deals, like it was trading anywhere between 65 and like 45 cents on the dollar, like how volatile that was. And since this kind of negotiations have been announced, it's actually kind of spiked up a little bit. So interesting to kind of see. I'm curious to see once it kind of goes through, like what are we potentially gonna see? Like, is it gonna, like you stated, is it gonna spike back up to 80 cents? You know, that's the thought process about these things. But the reason why, so some of these things that, like, if you think about it, in 2019, 2020, when a lot of these things were being issued, we were still almost in like zero interest rate sort of environment. And so when you were putting out, say 2020, I was looking at one for Exxon, it was like a 3.5%, 4% yield on the actual coupon, but the actual, you know, yield to expiry was something like 5.6 or something percent, because you would have been buying it, I think, at like 87 cents on the dollar plus the increased yield, etc. So that alone was basically going to be the reason why I think that one, even though like it's Exxon, like why is that trading down? Well, it's just the 30-year treasury is up. The 10-year treasury is up. So, people can easily go and buy those at, the backing of the United States government versus say Exxon. And so if that's the case, when some of these things are issued, if interest rates increase, they're just naturally going to have that drift. Like maybe it's worth me pulling up that Exxon bond really quick and kind of like just showing you on this one as well. So like when it was written in 2020, obviously it was trading, probably at par because in 2020, obviously everything went back down to zero, right? All the interest rates, etc. So that's probably why you had this spike up. But in 2021, 2022, when they started increasing interest rates again, of course it's going to go down because you have interest rates on the 30-year that are going to be issued at 4 or 5%. Well, why would you buy this Exxon bond at 4.3%? So, yeah, hopefully that gives people. There's some ways like you could look and go out there and try to find expiries that are like within the next year or two that are at a discount. And the whole thing is like all you're trying to do pretty much is figure out, hey, like if you were to hold this to maturity, you're buying it for 83 cents on the dollar. When the company pays it back, they're giving you $100. So, that's the only reason why this yield is changing, right? It's not anything to do with how much the company is paying out. The payment that the company is actually giving out is flat. It's just the value of this bond is what's really changing. And so some people just might go out there and be like, oh, this is expiring next month. It's trading at 95 cents on the dollar. Let me buy it because next month I get my $100 back, right? And that's pretty much what you're doing when you buy these what's the word I'm looking for? These U.S. Treasuries. If you ever bought T-bills from Treasury Direct, you're buying these for like $98 or $99, and at the end of the day, they give you back $100. They're not putting like money into your account like on a quarterly basis, if that makes sense. Anyway, I'll stop there.
So let me ask you this. Why would you want to buy the bond on Exxon at 84 cents on the dollar if hypothetically Exxon's equity is going to appreciate? Because Exxon, and look, we don't know that Exxon's equities are going to appreciate, but in my opinion, it's undervalued, and I'm getting paid 3.5% on the equity with probably more appreciation than what the bond can get.
Wait, say that again. I'm sorry.
I mean, if you're asking me, but I think that there's probably just other people out there, like insurance companies, that might not necessarily be able to purchase stock and leverage against it enough. But if they buy, say, Exxon and leverage against that, they might get a better leverage ratio.
Gotcha. Okay.
I don't know. Like that's so like there. If you were to ask me, like, why are insurance companies buying massive New York City apartment complexes at cap rates of 2 to 3% when they can go buy a bunch of auto zones at 6, 7, 8%?
Me and Matt were talking about this too. It's stupid.
So I don't know. I don't have an answer for you, but I have a strong feeling that it's a lot of it is you have barriers. I think when you have some of these larger companies. I think at some point you're just looking to put float somewhere that you can continue to generate money.
Yeah. Oh, people have a lot of cash on the sidelines, man. And I think that sidelines cash is just sloshing all over the place, which is hard, which is exactly why I don't think we could see a 2008 kind of thing. I don't think we'll see a pandemic kind of thing. I think at most we see a nice 10, maybe 15% correction in the markets like we did with Liberation Day, in which case the administration comes in and does whatever they have to do. So I think everyone waiting for this AI bubble to pop, I don't see it. If y'all do, by all means, go ahead. But I don't think that the equity market is a place you want to ignore during
a rate cutting cycle, you know? So maybe individual stocks could suffer here and there, but I think generally the market at most maybe corrects 15%, in which case we had a 15% correction and we bounced back. There's enough liquidity sitting on the sidelines where if we do have a 15% correction in the market, dude, everyone's going to be loading up on shit. What do you guys think about that? Do you think we'll have a long protracted downturn or another quick?
Matt, why don't you answer? Because my answer is going to be a little bit long-winded on that.
Steve has been telling Kris this last 2 months to buy NVIDIA.
Mhm.
Yeah, and I waited. I did my research.
Matt, can you answer Chris's question before I do, please?
Can you ask it again, Kris?
Basically, if we get a downturn, how quick is the recovery going to be?
Yeah, that's right.
Is it like a liberation day sort of thing, or is it like an actual recession? Slow down.
No, just a liberation. That's the thing. That's the question. Do we see a recession or do we see another liberation day, kind of like market just gets into fear mode and just sells everything off temporarily?
I don't think that we're at the moment at a place, and I've been burned on this many a times. I don't think we're at the moment of being at some sort of large 2022 scale event where we're actually in a recession, which 2022 was for me, even though it wasn't. Maybe they've gone back in the history books and rewrote it, but I just don't think that they wanted to have it underneath the Biden administration a recession. So call me MAGA Matt if you want. I just believe it was a recession in 2022.
100% agree. 100% agree with you, brother.
Yep. But yeah, so to me, I don't see right now with all the capex that's going on and everything like that. I still think that we are in a very healthy business cycle. I think it's lengthening in the tooth a bit. Do I think that there could be additional events that spook us? I think that I don't know. Maybe I'm watching too much Instagram, but I think that there's still a foot to drop with Taiwan. I still think that there's still a foot to drop with Ukraine and Russia, and there's a lot of other things in the world that have been resolved. A bunch of different small regional wars that I think have been kind of put to rest. But I don't think that this EU United States stuff is done. I don't think that this Ukraine Russia stuff is done, and I don't think the Taiwan China stuff is done. So I believe we'll have some additional turmoil associated with tariffs and those other three things that I just mentioned that could cause a 10 to 20% shock in the market. I don't foresee any long extended drawdowns that would be taking over the course of, say, 6 months. That thing that just keeps dropping and dropping and dropping, and you're just throwing good money after what it feels like bad. I don't think we have something like that. That was like 2022. Until maybe late 26, early 27 at the earliest. And I'm not saying that that's going to happen, but I'm just saying that I think, anyway, yep.
All right. So I have a pretty long-winded rant / answer to Chris's question.
Hit us, Steven.
No matter what happens, it is inevitable that a downturn is going to happen. It's going to happen. Markets just don't go up. And whether it's Q1 or Q4 or pushed out to 2027, you will get drawdowns of 3% here, 2% here, 5% there. Are we eventually going to get a 10 or 15% one? Absolutely. The country shut down during the pandemic, and we spiraled straight up afterwards. Now put the printing press on. What happened after 2022? Eventually, everything started going up again. So no matter what it is, Black Friday, the crash of 29, pandemic, dot-com bubble, eventually the markets reverse. Now, when I'm looking at the S&P PE ratios, I think the big thing that everybody seems to forget when you look at this chart is that we have way more tech companies now than we did. These companies are earning so much more than they were, and it's a much different market than the industrial market of the 70s and 80s. And a higher S&P PE ratio is going to be normalized over the next 20 years because it's just more tech heavy. So I think going back and looking at where we were in the 60s, 70s, and 80s is no longer relevant. And we're in a position where gaps get filled. There's a lot of money on the sidelines. And the Fed economic data is indicating that unemployment is going to teeter off after this year and it's going to start to decrease. We have declining rates. We have GDP expansion, and the Fed came out with something I did not think that they were going to say, that they're seeing GDP growth through 2028. So that pretty much takes a recession off of the table in a technical sense because it's going to be pretty hard to get 2 quarters of negative growth if the projections are now positive by 1.5% to 3% each year for the next several years. We also have an environment where this administration is going to do whatever they can to keep the economy propped up next year because of the midterms. And the amount of capital on the sidelines with these companies expanding earnings and deploying more into CapEx, they're spending more across the economy, which is helping smaller and mid-cap companies in addition to other large caps. The big thing is how much are these large caps going to be able to increase productivity through efficiencies through technology? And if we get a downturn, I think it's going to get bought right up. And maybe we get a 10% drawdown next year. But I think if we get 10%, we're back recovered within 2 to 3 months. I just think there's a much different economy than previous years.
Yeah.
So what are we buying, Steven?
Rusty's hilarious. Chevron respectfully asked that we do not bomb Venezuela. Yeah, no shit.
Who asked us to not bomb Venezuela?
Chevron. I think they're making a joke. But
Chevron still has operations ongoing in Venezuela.
Look, there's a couple of things I'm looking into now. I was talking to my father this morning. I think he's going to go on the VG train with you guys.
Who, Uncle Trump?
No, my dad.
Oh, really? What's he think? I don't care about him joining. I care about what his thoughts are.
He listened to my analysis on the LNG market, and he likes pipelines. So he's going to look into it, and he thinks he's going to go in on it. And I think I'm coming aboard because I looked into certain aspects that we're not going to talk about. And after doing my due diligence, I'm no longer that concerned. So I think I would be starting a position. Once I do, I'll be writing a full analysis on Seeking Alpha about Venture Global. But I'm looking at something that we all owned early in the spring. I'm going to do another due diligence round on SMCI.
I don't think that's a bad idea. I've been wondering.
I'm going to do another due diligence round on them. They're trading at a low valuation. I'm going to look at Hewlett-Packard Enterprise. I'm going to look at Hewlett-Packard because Hewlett-Packard is trading at a deep discount. And there's a few other things that I need to flush out, but I think there's some plays to make some money. And one of the things I want to do next year is a public portfolio. I don't know how I'm going to do it yet, but I am really thinking about doing a public dividend portfolio, probably the same way that I did the one on Seeking Alpha. And I'm probably going to do a public beat the S&P portfolio. Still got to figure out how I'm going to structure it.
Yeah, that's a good point. I've been thinking about offering something like that as well, along the lines of trying to two things. So I kind of have my 24/7 stream going now, and I thought about being able to buy, like have people be able to buy and sell $1 worth of stock every hour. And so if there's enough people in there, they can kind of vote like buy $1 of Apple, buy $1 of this, buy $1 of that. And it trades only $1 every hour. So there's APIs and stuff I can build to kind of do that. So I've thought about doing something like that, so that the community can see how smart they actually are. You see a lot of people in here they'll just like jump in at anything that's fun, that's fancy. So I think it'll be interesting to see how the community does. But I've been curious to work on something with you about that, beating the S&P 500, Stephen. Because I have my proprietary ETF blend that I've been working on. I think we've talked about this in the past, and the allocations of it. And my goal of it was to try to maintain at least pace with the S&P 500 within a certain amount, and then doubling or getting close to double the yield. Because my thought process is if you're able to maintain that and get a slightly higher yield, because as we know, the yield of the S&P 500, as it's been more tech driven, has obviously declined with time. So anyway, I think it's I'd be interested to chat with you more about that.
Well, I'll tell you that my dividend harvesting series that I have now written 249 articles of, the amount of people that read that series, because I can see all the back end analytics from my articles, it's really impressive the amount of people that are interested in it. So I'm probably going to do one on YouTube so I can actually walk through all the charts and give some explanations about stuff the way that you can only do on a video. You can't do it through just writing an article. And I think I'm going to do a full YouTube portfolio. And I'm not looking to, and I said this last night, I'm not looking for clickbait. It's not going to be a lot of money. I'm not going to be putting in something just to get clicks. Like, I'm going to start these from the ground up. The dividend one, I'm probably going to start from just scratch and add to it every week. The beat the S&P one, the way that I'm structuring it in my mind, it's going to be a minimal amount starting capital, maybe 5 or 10 grand, and then I'll add to it every month. And whatever I invest in equities, I have to put the same amount in VOO. That way I can, because that way I don't have to track reinvesting the dividends. I can make the equity investment in the S&P and just allow it to plow the dividends back in so I can truly see if what I am picking is outpacing it.
Stephen, everyone wants to know, what would you do?
I'll tell you what I am interested in. From the dividend one, Goldman Sachs has put out these new products that are freaking killing it right now. Killing it.
What about them?
GPIQ and GPIX. They're, you know what, Matt? They are like QYLG, but they sell the calls in a dynamic fashion where they do not have to write calls every month, or they do not have to write 100% of the portfolio's calls, and they take a dynamic approach to it. The combination of appreciation and income is outpacing all of the other mechanical ETFs that I follow, such as JEPQ, QQQI, QYLD, et cetera, et cetera.
Interesting.
It's that, Kris, you would really like.
I'm actually looking at it right now.
I have the data. Hold on.
Let's take this offline, man. We've been online too much. I think let's talk about it one-to-one.
Said he's tired of our crap.
Kris is tired of our crap.
Nah, I just want to get some sleep. I got to work tonight.
Works for quitters. I thought you were rich like that.
Work is for quitters. Okay. If that made sense.
It didn't. Don't worry. It did not make sense.
Yeah. All right, boys. Have a good night.
To the man.
Later, Kris.
Right.
Matt, I'll show you the thing real quick. I'm trying to find it. Just give me a sec.
Ooh, 50% clearance, Stephen.
What?
Myself some Christmas socks.
Wait, what?
You need new pants.
All right, so here we go.
Here comes Stephen Claus. Here comes Stephen Claus. Write down Stephen Claus link. Yo, you want to hear a fucking hustle while you pull this up that my one cleaner at my Airbnb did?
It's already up.
He so then give me a second. You can pull it back up. It doesn't matter.
No, I'm
But
listening.
his wife and him work and clean some of my, and they do some handyman stuff at one of our houses, actually a couple of the houses, and they messaged me in 1 day's work. Guess how much they got paid to be Santa Claus, the husband?
How much?
1 day's work, 3 events. Just give a guess.
$1,200.
Damn, maybe he's underselling, but he got $500 easy. No questions asked.
I don't know.
How much would you charge, Steven?
Oh, I wouldn't, because I wouldn't do it.
Not even for $1,200?
No,
Why?
I don't know. You said 3 events. I'm thinking $400 an event. I don't know. I have no idea what that costs. The way you made it seem like it's some crazy number.
I mean, I'm just impressed. Like, I don't know. I would assume that I never really thought about like using Santa Claus as a hustle, but $500 in a day?
Yeah,
good.
I mean, that's off the books cash. It's great.
I know, but I'm like wondering why I haven't booked all my shit up.
Why aren't you?
Next year, man, I gotta book it up.
You can write the Santa suit off against the income.
I'll dye my hair white for the entire month of December.
Do it.
I'll like figure out how to get some gray in there.
Like it.
I mean, I'm surprised. Maybe you know what? I think I figured this out. Before we get back to the stock talk, I think I figured out why Steven is so off against this. Steve loves cookies and milk so much that he probably is fucking Santa Claus, and he feels like I'm mocking him.
Did you know that there was a company that came out with cookie milk?
See, topic switch. I fucking hit it
No,
on the head.
there's no topic.
I hit it on the fucking head. I hit it on the head. All right, go. I'm sorry.
saying,
We're back to stocks. We're back to stocks.
I was shown cookie milk this morning.
What do you think?
I think I gotta try it, right?
I think you gotta. Dude, people love it. They think it. I think we hit it on the head, Steven. You're actually Santa Claus.
I don't know why people think I'm freaking Santa Claus. I'm not.
Because you're fucking yoked Santa.
I'm not.
All right.
So I use QQQ and SPY as the baseline for the market. So end of 2024 to the other day is where the price was. These are actually all current, so I should change that to today. Is I have they coded. So the combination of the distributions plus the appreciation for SPY is 17.23%. GPIQ has generated a distribution yield of 10.58% for the year, or 2025, I should say, not the past year, for 2025 year to date, with 7.25% of appreciation. I mean, that's pretty damn good blend.
Can you add in?
You want QYLG?
I want JEPI, GEPI. I know you have JEPQ, but I'm curious about JEPI.
JEPI is not nearly as good as JEPQ, but I can give it to you.
Yeah, and then also if you could add XYLG.
All right, we'll do it live for you, Matt.
Do it live, damn it.
JEPI and QYLG?
No, XYLG. QIL. It doesn't matter. You could add QIL as well.
The reason I did not put JEPI and XYLG on this is because QDVO, GPIQ, QQQI, and JEPQ are all based on the NASDAQ. So if I add JEPQ, XYLG, and anything else that's based on S&P,
they're different. I get it.
It's going to be under these.
It's going to be more related to the SPY.
Correct. But I'm happy to do it.
Put in QILG then as well. In between JEPI and QILD. So right next to never mind. That's fine as well. Beautiful. Here comes Stephen Claus. Here comes Stephen Claus.
God damn it.
Write down Stephen Claus Lane. Steven, getting Chinese tonight? What's the deal?
Ooh, that sounds like an idea, Matt.
That chicken sandwich was only 780 calories, so you boys got some. But I do have some, Steven. I was gonna crack them open earlier. I got a little. That's why I was a little late. I was at the store. You got to help me choose one for tonight, one for tomorrow. Which of these bad boys am I choosing, Steven? While you're getting this table set up for me.
Hold on. I can't do everything at once. Give me a sec.
His name's Steven. Making that work. You're doing this manually?
Yeah.
Steven, you're better than this.
What do you mean I'm better than this? Why, you can code this to do everything automatically? The way that I need it done?
Maybe, Steven.
If you could, do it for me, please.
Let's give Steve something to talk about. Let's give Steve something to talk about. How
Why
about
is
love?
XYLG? Oh, I'm sorry. I have it on fucking 1 year. Hold on. 2789.
Move. His name is Steven. Steve wants a cup of fucking milk
I do want a glass of milk.
with ice cubes. No ice cubes. Steven doesn't like that dilution.
Oh, why would we want ice cubes? You don't want to dilute the milk.
You need that ice cold shit, Steven.
Dude, come on. Frosty mugs.
That's true, man. You get a nice Yeti or like the copper cup. So that's what you do. You put your copper cups in the fridge or what, or the freezer or what?
What do you mean?
Because it keeps it extra cold, right?
Oh, yeah. You listen. There's a lot of things you can do.
Steven over here.
All right, so here we go, Matt. QYLG and XYLG have underperformed GPIQ this year.
An appreciation?
In both. Appreciations here. Dividend yields here. Total returns there.
So that GPIQ is the new Goldman Sachs boy?
It is.
What's QDVO?
It's the Amplify dynamic.
Amplify one?
Yeah.
Interesting.
Tevis is going to yell at me. I forgot. Let me
Dark mode, Steven.
dark mode for Tevis.
How does Devo stack up against these? You don't have to do it. I was just wondering if you knew.
I don't know, Matt.
That's fine. You don't need to worry about it.
But I can do it very quickly for you.
Only if you're interested. I don't want to.
I am interested, Matt. I am interested.
Because Devo's kind of like independent, right? It's like I forget what they do. I think they do.
Devo's on the 100 most liquid or something like that. It's
yeah. So I'm kind of curious. I'm thinking it'll probably perform in between XYLG and this GPIQ QDVO. Yeah, there you go. 13%. Steve thinks he is better than me. Oh, Devo actually did a little bit better than I was expecting.
Yeah, Devo's doing pretty damn good. It's right up there with GPIQ, but it's more appreciation than income, whereas GPIQ is really even. You know what I mean?
Yeah. I think once again it goes back to like, what do you need? You know, like, because obviously on that distribution yield, like you're paying taxes on that unless it's in a tax advantage. So, you know, that yield might show up as 11%, but an effective yield, you know, depending on your income, could be different.
I don't know, Maddie.
Different stories for different folks, you know, like.
I don't know.
It's a really good graphic.
For everyone in the chat, do you guys own any of these?
I used to be, when I was a dividend guy, I used to be all about Jeppy and Devo. And I was cautiously optimistic that I'd be able to invest in like a QILD and do really well. But as you're seeing, the problem with QILD is they're more income focused, and so they're covered calls. They don't buy long calls; they just sell calls. And so obviously with Liberation Day, and then obviously what's happened over the past month with the recent kind of like lowering of tech stocks and the Qs taking a slight hit. That's impacted QILD quite a bit.
Yeah.
Because it doesn't appreciate back. It doesn't bounce back as fast because of the covered calls.
I mean, plowing the income back in has done well, but they need to change their underlying strategy to buy long dated calls with a portion of the premium.
Mm-hmm. But I like that XYLG. Like, look at that. Like that. I'm a big proponent of that. I'll just be blunt. XYLG is part of my. Hold on a second. I might have to take this. I got to take this, Stephen.
Okay. So for everyone in the chat, I'm a big fan of QQQI now. It's one of my favorite income producing ETFs only because distribution yield is huge. And what they do is they retain a portion of the income from the covered calls that they write. And by out of the money call option. So if the market appreciates, it'll appreciate a little bit with the market. It's not 100% capped because it retains part of the premium, buys the out of the money calls. So I'm a big fan of QQQI these days because it gives you a huge amount of income from a portfolio of assets that I really like.
A piece of it though that I'm kind of curious about. Sorry, I thought it was the contractor. It's some spam something. You have to pay, unfortunately, unless it's a tax advantage account. Once again, you have to pay taxes on that 14%. And if it's long-term capital gain or short-term capital gains because you're buying calls, what would the taxes actually look like on something like that?
Can I just be honest with you?
Yeah.
I could care less.
Well, Steven, not everyone's rich like you.
I'm just saying, paying taxes is not a bad thing, Matt.
I know it's not, but I'm just saying, like, if you give me an opportunity at my current standpoint, right? Like, if you were to say, Matt, I have 20% annualized in appreciation versus 20% in dividends at the moment, for what I'm looking to do with my portfolio, I would take the 20% appreciation because I don't have to pay capital gains on that until I want to, if not ever.
Right. So there is I don't want to misspeak because I'm not an accountant, but there are a tax. So I'm going to share it so nobody can say that I am saying anything incorrect. Okay. This is directly from Neos Investments. Everybody can read it on the screen. they have a tax efficiency portion of this where the index options are classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. I believe a good portion, I'm not even going to say it just in case it's not true, but I'll tell you offline. And this is a big reason why a lot of people like the NEOS investments over some of the other funds.
They do the indexes.
Yes.
I'm not saying it's bad. I'm just saying, like, just be cautious, right? Like, you can't take verbatim. Like, you have to have almost that caveat, because, like, if somebody's even at 60/40 and you're in my tax bracket, I mean, that's going to eat away a large chunk of that 14% of dividend.
My philosophy is if you have to pay taxes, you made money, so it's a good thing.
Yeah, but I'm just saying, like, if you're going to say, hey, I have 20% appreciation, which you have to pay 0 taxes on, versus 14, let's just say it's equivalent, 14% of dividends / income and 6% in appreciation to still get you that 20%, but yet you're going to have to pay 35% tax bracket, or even 20% tax bracket on this 14%, you're effectively decreasing the amount of income by 4 or 5%.
Yeah, this is why
Overall.
people look for things that have a split of return of capital, et cetera, et cetera. No, not true. So no taxes until you take the money. Keep in mind, dividends are not long-term or short-term capital gains. You should read up on the tax code around dividends.
So comes Steven. Steven, I need your help.
Okay.
Am I eating this delicious M&M?
Oh, look at this. Look at this guy.
Or
And you got Christmas colors too.
I did. She asked me if I wanted Hanukkah or Christmas. Last week, I wasn't on stream, but last week what I got was the double chocolate chip version of that, which is delicious. Or do I want a Mexican wedding cookie?
I don't even what is that?
I don't know how to describe it, but it's like a cookie base, but it's got some, like, I think hazelnut.
I'm a fan of
like
hazelnut.
finely chopped in there. Maybe it's not hazelnut, maybe it's pecan. I don't know.
Oh, those are
But
two
then
much
it's
different things.
covered in like powdered sugar. It's delicious.
Those are two very different things. Pecan and hazelnut.
I'm not smart, Steven. You know this.
I would say go get a nice big glass of whole milk and the M&M cookie is where we need to go. It's where we need to go. Why do you have sunglasses on? You're inside. Is your future just that bright that you need sunglasses?
I'm blocking the hate.
Blocking the hate. What hate?
Flying close to that sun, Steven. People are coming after me.
Dougie.
Look at me. I'm like a single mom. I got the vacuum cleaner in the background. What is this?
Dougie, I have never seen one of those cookies. So, yeah, remember, I really only go to Italian bakeries.
When the moon hits the
And I will say
eye,
this. And
like
I,
a big pizza pie, that's amore.
dude, when you coming out with a Christmas album?
I can't beat Frank, dude. You know that. Frank is all time.
Oh, here we go.
Dude,
Michelle with the answer.
You just reminded me. I'm upset with myself, Steven.
Michelle with the answer.
There you go. Almond cookie, powdered sugar, cinnamon, or cinnamon and sugar. Yeah, the place that I go to. Actually, Steve, I need your address because, oh, wait, I already asked you this. You don't like pecan pie.
I mean, no, not really.
Let me ask. I want to send you something, Steven. Let me at least. I know I'm going to come and meet you and hang out, but are you and the missus going to do any like Christmas dinners or something?
No, probably not. I mean, I told you when I'm taking a mid out, so.
Yeah, I need to be up there. Email, custom cakes.
Dougie, I wish that Matt had that private jet money. That'd be great.
If I did, I'd be like, to Steven, come tonight. It takes so long, like it takes so long. You have to go to the airport and, like I just want to show up to a strip, get on the plane, and, and the thing is, Steven, you and I were talking about this the other day. It's like I'm not that close, but I'm close enough where I'm like, why the fuck not? But I'm far away enough to be upset with myself. But I'm still close enough where I'm losing motivation to work hard. I'm not like Steven. I'm not built for this 24/7 streaming shit like Steven. Steven's just a different beast.
I mean, wasting time sucks. That's all there is to it.
But you remind me how much I'm upset with myself, Steve.
Why?
Because it's the 14th of December and I still haven't listened to Frank Sinatra at all yet. And I've been more jolly this Christmas than I have maybe since I was like 10 years old.
Wow.
I'm like, I need to get Christmas gifts for everybody this year. I don't know why. It's just been a great year. I want to let people know I'm not a good gift giver, but for some reason this year I'm like determined to get people gifts.
Okay.
Normally with my siblings, I'm like, we're not getting anything, so you don't have to stress about it or whatever. I was like, no, I need to get you something. What do you want?
All right.
I need to do the same as Steven. Steven, what do you want?
What do I want? I don't want anything. I'm good.
Question for you.
Yes.
And you don't have to answer this on live. It's not going to be that scary, but like, I know you don't really smoke cigars anymore. If would you still at least go to the cigar lounge or no?
No. Nope. Over with.
Sad day, Steven.
But if you come up here, I got something you can take back with you.
Steven, don't threaten me like that.
I'm just saying, I got some stuff you can take back with you.
Don't threaten me with a good time.
You can go through the top one and take what you want.
You're a good man.
I mean, there's some Opus X's in there. There's some good stuff in there.
Steven. What are we buying these days, Steve?
I don't know.
Are we turning this into alternative asset? What alternative assets? Hey, I have a question. The past two videos with Rudy, I'm upset. So sorry. If you want to keep talking stocks, we can. But now I'm just gonna shoot the shit with you. Unless you want to keep talking stocks. But
no, we can do, you know what? Let's do this. We can turn into alternative for 18 minutes.
18?
Yeah. I need to try to bang out another article tonight.
You're a different animal, but the same beast.
I would like to try to get another article done.
You're a good man. You're a role model to society. Rudy, when he talks from his house, like not his like locker,
all his fucking oil paintings.
Yeah, like so that gets me fired up. Are those originals? Like what is he doing?
I don't know, but he's got that. He is something else. That much.
And to be fair, like I was listening to a story. I don't know if you watched his last episode where he was talking about how he got fired or whatever.
Yeah, I know his entire story. He made a full video about how Rudy became Rudy.
And so basically this guy started in the financial markets 2007, and then he started making sandwiches for the armed forces, and then he started up his like side hustles with selling, Pokemon cards and Magic the Gathering and etc. And he is where he is today. Guy's the man. Probably worth tens of millions, if not over $100 million. I don't know, Steven. Like, it inspires me. Like that seemed really badass. Like all those oil paintings in the background. Like,
yeah. So the big thing now is League of Legends. Did I tell you this or not?
No.
All right. So there's a new investment out there that I am being told that we should be buying. It is called Rift Bound. I'm bringing.
I have heard that.
I'm bringing it up right now on the screen. So for those of you that know, Riftbound is League of Legends. League of Legends is the largest video game, I believe, in history. This is the initial set, just came out, and I am being told that this could be the big thing to get into. So I'm probably going to buy a few.
Interesting. Riftbound, buy a few of those.
Yeah.
I have a couple buddies. Who are into League of Legends. I'll be curious if they know anything about it.
I mean, I used to play League. I was pretty good. And I tried playing not too long ago, and I got mollywopped. It was crazy.
Mollywop.
Like, I thought I was good. Like, I couldn't do a thing. It was nuts. I could see this getting huge because this is a global game. I just don't know with how big Pokemon and One Piece is getting that this is really going to pick up a lot of gameplay, but we'll see. Rusty, thank you so much for the super chat. It is about SCHD coming out tomorrow, and I was going to write an article about 1OK tonight. Look at Dougie buying a few packs of Pokemon for the nephews for the Xmas. Listen, Phasmatal Flames is the set. Hopefully they pull a Charizard, but I bought a bunch of boxes, and the Pokemon market's starting to decline a little bit. But
Love it. I love that.
Listen, I'm looking to buy more. I'm going to a pretty big show in January. 500 tables. So I'm excited. I'm going with I think 6 people at this point.
Steven.
The alternative asset market's huge. Did you see the CNBC video about it, Matt? Morgan Stanley saying 100 billion.
100 billion, man.
Huge. I'm telling you, everybody thinks that I think people legitimately thought I'd lost my mind when I started talking about this a year and a half ago. This is going to become so legitimized. I don't think people are ready for what happens.
It was the reason why I never got rid of my Pokemon cards.
I mean, do you still have your original stuff?
Fuck yeah, I do.
You have stuff from 99 and stuff?
Fuck yeah, I do. I thought I told you this.
You did not tell me this.
Steven, what you want, Steven?
Dude. Have you priced everything out?
Sorry, my thing came loose again. I don't know.
Have you priced that stuff out? Oh, we got the faulty microphone.
Yeah.
Why are you wearing a headset? Earth to Maddie. Earth to Maddie.
The fuck?
I can hear you now.
Can you hear me now?
I can hear you now.
Damn it. Come on, bro.
I can hear you.
Oh, there we go. Let's switch back.
Why?
No, I have not. What's up?
Why are you using a headset?
So that people don't hear you talking.
What are you talking about? That's
You
not
see how. Well, what do you use to not have people hear me talking?
nothing because I don't.
If I spoke loud enough, they would hear me.
I doubt it. But
What you want, Steven? You want a little Articuno?
Have you priced those out for PSA to send them in for grading?
No.
Well, you probably should do that.
What about an original 1999 Blastoise?
I mean, I think that's worth some money, Matt.
It's got some scratches. Not horrible, but
Can you do me a favor and go to a freaking TCG shop and bring that binder and see what they think?
what about a 1999 Hitmonchan?
Yeah, Charizard in there?
No Charizard, but I do have Lapras. And I have
P Football Pete's got some good prices right now.
this Mewtwo is in good quality condition. I might be able to get some money.
So why don't you? Is that 99?
Steven.
Hold on.
I might not have to work anymore, Steven. That's what I'm saying. Okay. I knew this day was coming.
How do you spell it? There we go.
Good.
Is it a hollow or non-hollow?
It's definitely holographic, yeah.
And if you get a 9 on that, it's worth about 400 or so.
Got a Ninetales. Holographic
Yeah,
Ninetales.
I think you should go get those graded, Matt.
Got a holographic Zapdos.
I think you should get them graded. But in all seriousness, are you buying more boxes or not?
Yeah, I bought what did I buy yesterday? I bought the latest, I think. Hold on, I just priced it out. Like everything that I just bought. I'm upset because I want Destined Rivals, but Destined Rivals, everything else, like you said, you could actually get at a decent price. The one that you can't right now is Destined Rivals.
So people are thinking that Destined Rivals is going to be the Scarlet and Violet era's Evolving Skies.
Really?
Yeah.
So that's what made me think, like, do I just buy and eat one? And if it actually does go back down, buy potentially another one. But where am I at? That's the one I'm missing out of the recent. So I just bought Phantasmal Flames for $250 a box shipped. Mega Evolution for $270 shipped. I bought 6 booster bundles. I couldn't find a good box set, but I got 6 booster bundles, which is the equivalent of a booster box, for $260. That's already up in price a bit. The Prismatic Evolution, I bought a 3 booster bundles, so I got like half a booster box of that. I bought that for about $60 each. I got Surging Sparks, so I finally got that. I didn't buy the latest, like, what is it, like white and blue? What are they? I forget what it is.
I haven't bought it yet because it's on pre-release. It's not coming out till sometime in January, I don't think.
What? The Scarlet and Violet, white and blue?
Oh,
white and black?
that's the previous era. Yeah, white and black. Those are the ETBs.
Not worth it? Worth it? I don't know.
I don't think they're worth it.
Did you buy it or no?
I have them. I wouldn't run out and get them though. I would just focus on the booster boxes.
Yeah. Surging Sparks, I would think, is actually going to do really well.
I have a case of it.
See, that's what I've been thinking. I'm thinking like, I keep thinking like, oh man, I got a lot. And then I calculate how much I've actually paid and all this stuff. And I'm like, for how much effort I'm putting in, I'm like, I should probably start buying cases.
So that was the last case I was able to get at a good price before the whole market went haywire. I paid $650 for that case. It's going for $1,674 right now. So I'm up $1,000 on it.
Surging Sparks?
Yeah, I got a case of it. I paid $650 for the case.
From whom?
Don't worry about from whom.
Your Connect?
Don't worry about it. Yes, I do have a Connect, and yes, but unfortunately, I get throttled because my Connect does not get cards at good price, enough cards at good prices where I can get whatever I want. But we'll see what happens. I mean, look, if things change a little bit and some of these stores go under, I bet you Alex is going to get the call and he's going to get a ton of stuff at good prices.
I have a buddy, well, at least a guy that I know, not a buddy, I guess, but a guy I know. He told me he's like in the industry, and so I just messaged him, being like, "How?" My basis is like, "When am I going to start buying from you? I want to see how actually in the industry he is, or if he's just, you know what I mean? Like people say sometimes that, you know, as a hobby that they're in the industry. You know, they do like a sale here or there. They're like, oh yeah, I'm in the industry. It's like, are you actually like, are you a guy or are you a guy? You know?
I mean, you're either Rudy or you're not.
Yeah, like I'm trying to understand. Like, are you trying to compete with Rudy, or are you trying to be like me, like an end user, end investor, small time? You know?
I don't even know how you become Rudy. It's so ridiculous.
Dude, he was talking about today or yesterday, or whatever, how he was getting boxes for like $65 or $70 and selling them for like $120. And people were complaining. So I don't know. How can we fund and become a guy, you know?
So we can't. Here's why. Before everything went crazy, you could have applied to Southern Hobby. So there's several main distributors. Southern Hobby is probably the biggest in the country, I believe, with GTS and someone else. And you needed 25 grand in order to open an account and get distribution. The problem was that you can't just buy what you want. And the way that it works is, in order to get all the booster boxes, you have to take all the shit also. So you got to take the blister packs, the bundle packs, the tins, and everything else. And at the time, it wasn't profitable. And then all of a sudden, you had all the scalpers come, buying everything off of Target and Walmart. You had all the rip and shippers come. So it was much harder to get products. So now people were willing to get anything they could get their hands on. And it made the market go haywire. So now there's a theory that it's going to reverse. Some people don't think it's going to reverse. So we'll see.
Everything goes through ebbs and flows and cooling, you know?
Yeah, but we've never seen a cycle where people are camped out at GameStop and Target to go buy Pokemon cards because of how strong the reselling market is. And the big thing about the Pokemon market, you look at people like Alex, Nostalgianomics. I mean, he goes through thousands of packs a week. He's just one person. So when you think about the amount of packs being ripped on a weekly basis, so much product is getting ripped that I think steel product is just going to go up in value.
The thing that I'm upset about is because, you know, when it's just like you hear stuff and you're like, I should probably listen. And then, you know, it's like, it's always super tough to decipher what's hype and what's reality.
Yeah.
I remember my one buddy, he wasn't really into Pokemon cards, but back in 2020, when they really started releasing like the newer sets and they were like limited sets rather than just like print until nobody buys it anymore. Like when they started getting more like exclusive. So I guess it was like XY and stuff like that. He was like, dude,
stuff at XY is expensive.
Yeah, like he was like, maybe it wasn't XY, whatever it was before Sword and was it Sword and Shield? What was before Sword and Shield?
Sword and Shield.
Let me see.
Sun and Moon.
Sun and Moon. So yeah, I think this was like Sun and Moon time frame. And he was like, "Yeah, dude, I went to Walmart," and he was just like, "Just bought a bunch just to fuck with it," and I opened them all. And I mean, this is 2020, right? 2020, 2021. And he's like, and I found one. He's like, I sold it on eBay and like all this stuff. But like back then, people weren't, like you said, lining out in Target to get this shit, you know?
Yeah.
So like, had I known about it back then, like I thought about it for like maybe 2 minutes, and I was like, meh, didn't think about it. And then, so then when you brought it up, like I guess a year and a half ago, I was started thinking about it again. I was like, I really should. And so I'm glad I did, because when did I start buying? I started buying late 24, I guess. It took me a while, because you started talking about it on Mitt's channel like in early 2024, I feel like.
Everybody thought it was crazy. I'm telling you that this market is just getting bigger.
I hope it falls off. I would love to buy more.
Same here.
Steven out here with Evolving Skies, and what do I got? I don't have.
I should have bought more. My buddy thought I was crazy when I paid $4.30 for a box of Evolving Skies. He thought I was nuts.
I have from Sword and Shield. I have Rebel Clash, Vivid Voltage, Battle Styles, Chilling Reign, or as Alex calls it, Chilling Pain. Lost Origin, Silver Tempest, because you told me Silver Tempest is a good one.
Yeah.
And then I have some Crown Zenith tins and booster bundles, but a lot of those up. The one tin that I bought is up like 300%. So I guess maybe they have like a higher percentage or something. It might have been a fluke. Maybe it's down.
You got to go to a show and look at how crazy these shows get.
The only box that I'm down out of all those that I bought for Sword and Shield is Vivid Voltage, but I need to check. It might be back up. I'll check right now.
Vivid Voltage.
Check right now, Stefan. Sorry, I completely went off on a big tangent.
No, it's fine.
Nope, never mind. Vivid Voltage is back up for you, boy.
I mean, look, I think the alternative asset market's going to continue to get bigger. One Piece is the new hot thing. If it has staying power, I don't know. It's huge in Japan, so I don't know. But that's what a lot of money is moving into right now.
You're big in Japan, Steven.
I mean, the Japan market's pretty interesting. Moral of the story is just buy every booster box, because nobody knows what is going to be the next Evolving Skies.
Nobody knows, Steven.
Nobody knows, Maddie. Nobody knows.
You
know what I do know?
You need to go.
That if I had your money, I'd donate mine.
You say that, Steven, but I'm not doing that great.
Okay.
I'm doing okay. Doing okay. You're right, dude. This stuff has come down.
Some of it's come down.
Huh. Not a bad thing. Not a bad thing. Like this Silver Tempest. I'm curious what Silver Tempest is going for now.
I think we're going to call it, Matt.
That's fine with me. Thank you, everybody.
So, Dougie, what you should do is buy a booster box of each for your nephews, or a ETB of the same thing, of the new set, Phasmatal Flames. They'll love it.
Yeah, I mean, it depends on how many they want. Like, it might be, that's like a couple $100 to do.
And Rambler, I will say this to you. Alex, who's been on a couple of times, he has a theory about prismatic evolutions is going to be huge in the next couple of years, because they printed it into the ground and it has so much demand. He thinks it's really going to do well. So
he thinks it'll do well. Why? That he doesn't think that they're gonna.
The Umbreon in it is just still commanding a huge premium.
So even though they printed it huge,
Yeah.
he doesn't think they're going to do any more prints.
No, he thinks that Prismatic Evolutions is going to be like the set that people wish they bought more of.
Interesting. I think that one might be down right now.
Dougie, I will hold on. Hold on, Dougie.
Hold on, Doug.
Saying that I just told him to build a rocket. We're not letting him go out like that.
You told him to build a rocket? What?
Phasmatal Flames.
Oh, how to build a moon rocket.
I just saw Phasmatal Flames on freaking P Football P's site. Hold on.
Yeah, what was another one that I saw like coming down huge? I think it was Journey Together.
Is Journey Together coming down?
Let's see. Steven, when are we going to start our? When are we starting our video game?
Well, we need freaking whatchamacallit to come out.
Yeah, but we need to start something before then. Let people know.
Dougie, here you go. These are the booster boxes. There's an ETB that's less expensive. I'll try to find it for you from. I trust P Football Pete. That's why I linked it. He also has the ETB right here. So this guy does tremendous business. I bought from him. He sold 564,000 items on eBay. He's legit.
You're legit, Steven.
No, you're legit. I need Steve League streams. You don't want me to stream League of Legends. I'll get freaking mollywopped. I can't do anything. I suck now.
I was gonna say, like, what game can you and I play that even if we're getting destroyed, people don't care because we're still talking about
I mean, we can freaking play League of Legends.
I don't know. I've never played it. I'll play it. I don't know what to do, but
I mean, we could. All right, what we could do. You ready for this?
when are you getting right? When are you getting Rudy on here?
No. This is what we could do. All right. We get Warcraft 3. Okay.
Okay.
We stream ourselves playing against each other and we play $20 a game.
Let's do it tonight.
Download Reforged. I got it on the computer, I think. Do I? If not, I can go get it.
Number 3? I have Warcraft 3.
So Warcraft 3 Reforged. They freaking redid it with all the new engines and stuff.
How do I get that? I just have Warcraft 3. Oh no, yeah, I do have Warcraft 3 Reforged. Yeah.
So why don't you practice up? Let's make different channels.
Practice up.
What,
different YouTube channels?
Supposedly, if we stream that on this channel, on our regular channels, it'll screw up the algorithm.
Would it really?
Yeah, that's what I'm told.
Let's see what Grok says.
I mean, Tanner and Amit both told me not to do it. I'm going to put a poll out. Would you guys watch Matt and I play freaking Age of Empires or Warcraft 3 against each other?
Dude, I was watching. So I think people know at this point. Like, I play World of Warcraft, and that's why Steven can't get me on stream on Saturdays, is because like it's literally.
I wasn't going to blow up your spot.
I'm blowing up my own spot. That's fine. So, and I didn't play for the longest time until my one buddy was like, dude, let's play it again. And then and then even Steven was giving me crap like, dude, let's play again. Next thing you know, like Steven, I show up, he gives me 500 gold, and then he's nowhere to be found. So I'm like waiting for him to kind of come back to the world. But anyway, so some of the people that I play World of Warcraft with, they're all about Age of Empires, and it looks fun, dude. I watched them stream it a little bit. It looks
Yeah,
like a good
but
time.
you know what? The problem with Age of Empires, it's awesome building your town. The actual fighting the other person sucks. Whereas Warcraft 3 is just so much better across the board.
And they were also playing StarCraft.
StarCraft.
I never played any of them competitively other than Warcraft 3. I played the computer and I got my shit pushed in. So I don't know. All right, go write your article, Steven. You think you're better than me?
Well, I got the poll going. It looks like
Oh.
60-40, no yes.
So yeah, it's probably prudent to start a separate channel, isn't it?
Yeah. Maybe we'll start another channel and do it.
Interesting. Hey Steve, do you mind shouting out the 24/7? I'll send up. I'll put the link in the
No, hold on.
YouTube.
Where is it?
Yeah.
I got it. I got it. Don't you worry.
You got it. Okay.
The actual channel or the stream? Which one?
The ongoing stream. It's gonna be up. I think I'm like tweaking it. For some reason, the computer still like will crap out every once in a while, but I think it's because I'm trying to. People were complaining about the blurriness, so I was trying to up the quality of the output, and I think the computer just wasn't handling it. So
all right. So here's the link for the Street Exchange. Please follow it. You can keep the conversation going there. Maddie has a lot of interesting stuff on here. It's pretty cool.
I'm trying to build it out more if anybody has suggestions. But yeah, so the theory behind the Street Exchange is like there's obviously 500 people watching this right now. There's over 400 watching Steve, 100 watching me. I'm sure if you guys have been having a lot of fun chatting along in the chat, keep that conversation going at the Street Exchange. And then I know Amit's probably going to go live here soon. So while you're waiting, it'll have a little stream of when Amit shows up. And when Amit shows up, go to Amit's stream. And that's the hope of the Street Exchange.
So let's see. Oh, wait. We got 54% yes now on 63 votes. So
I mean, it's not looking good, Steve. I think we got to create a separate channel.
I think we got to create a separate channel and do it.
So I don't know. So curious on your thoughts. Maybe this will help you. Maybe it won't. But I was thinking, and maybe this actually would help you because I know you're talking about your cookie stuff too, and starting up that business potentially. But originally, I was just going to be like, I have Matt money. Obviously, I talk about finance. Then I was thinking about Matt travels, Matt eats. What else? Like, so you think about it, like there's a lot of different Matt plays. So Matt plays video games. I don't know. It could potentially work, Steven.
Let me tell you, I was thinking about getting a GoPro and going to steakhouses by myself and eating steak. Because I think I would be I could make a much better food channel than half these people that I see on YouTube.
I'll even fly up for it.
I mean, I'm with it.
I'll even fly up for it.
I'm with it.
Cool. All right, get out of here while you appreciate everybody. I see 10 people watching Street Exchange now. Hopefully we can continue the conversation going on over there. But
all right, everyone. Enjoy the rest of your Sunday night. It is 7:15. Thank you for joining us. I will be live tomorrow night at some point. I believe Kris and I will be live at 8 or 9. I'll figure it out. I'll get the stream set up, and then Maddie and I will probably be live at some point during the week. We'll figure it out.
That's why they pay the big bucks, Steven.
You know what? If I had your money, I'd freaking donate mine.
Thank you, brother.
Thanks, everyone. Really appreciate it. Enjoy the rest of the night. Talk to you later.